Get your fixed income fix. Watch Bloomberg Real Yield every Friday right here on Bloomberg. Context changes everything.
DOJ or other authorities
could face bigger challenges next.
It was going to keep reading World Cup. This is a 3
as the economic picture
covering the intersections of Hollywood, Silicon Valley, and beyond.
Good morning. This is Bloomberg Daybreak Europe. I'm Tom McKenzie in London. These are the stories that set your agenda.
Taking you from the U.S. market's close to the overnight session in Asia. We'll walk you through what you need to know to kickstart the European trading day. Live from our European headquarters, we bring you the day's top market-moving stories, unmatched expert analysis, and on-the-ground reporting from across the continent. Tune in every weekday at 6 a.m. London time, only on Bloomberg Television.
Middle East and Africa. Vibrant resources and high-yield investment opportunities abound. Join me on Horizons Middle East and Africa for the stories, newsmakers, and insight from this exciting region. Now weekdays, only on Bloomberg.
The countdown is on. Everything you need to get the edge at the end of the market day.
Big tech earnings kick off later this afternoon.
Gilead is coming out right now.
We have Take-Two numbers. Back to the markets, right? Our bread and butter.
NVIDIA is one of the best stories in the tech space.
that actually matters a whole lot more.
It might shock some of your viewers.
You're watching The Close.
Get ahead of tomorrow's trading with The Close. Weekdays on Bloomberg. Context changes everything.
From the beating heart of global finance, economics, and politics, and wherever newsmakers are moving markets, Bloomberg brings you conversations that allow for deep discussions and important insights. What do you think the future is for inflation? Is this new normal? Are markets too optimistic? How do you worry about the things that are outside your control? How does the current fighting completely stop? I'm Francine Lacqua, and this is The Pulse, every weekday only on Bloomberg.
Monday the 19th, couple of minutes to go until the start of equity trading here in Europe. Looks like we're going to see a fairly soggy start. We're not going to see a positive start, I guess is what I'm really saying. Let me talk about the legacy out of Friday, and then we'll kind of address what's happening with futures this morning. European equities actually kind of rolled over and then had a little bit of bounce into the close. That momentum looks like it's going to struggle to continue on Monday morning, which is interesting in as much as actually US futures picked up a little bit. Sorry, US stocks picked up a little bit into the close stateside Friday, continuing what was been a decent run. US futures looking a little soggy as well this morning. So let's talk a little bit about what we're seeing in terms Bank of England is going to be speaking Friday at Jackson Hole. We'll obviously bring you that and all the other news on the central bank front. But it's time for the opening trade. Let's show you what the numbers look like this morning. We're expecting something a little soft, but not that soft. Basically a flat line, a wait and see, a sit on your hands start to the week. And I think that's what we're already getting in terms of the numbers. There you go, the FTSE 100 barely budging in terms of the early performance that we're seeing there. You've got the IBEX in Spain up a little bit, but not by much, 0.2%. The 600 is absolutely fairly flat. This is a wait-and-see kind of a market. After a decent run, a decent recovery, we've now got some big catalysts coming up, but they're not for a couple of days. So the market may be taking a slightly more cautious approach this morning. It has been risk-on for the last few sessions. The market's been back with a bang, but that looks like it's maybe run into the sand a little bit this morning, Critty. In terms of the details, what are we watching?
Well, we're going to see some individual kind of movers. When it comes to the biggest weights, you are seeing tech kind of on the back foot here. So your ASML, for example, is going to be weighing right alongside Novo Nordisk, which I think is interesting when we're talking a little bit about that rotation trade. You can see your heavyweights, your sensational six, if you'll call them that, pulling back. But it looks like LVMH seems to be, at least from an index perspective, one of the upside movers that you're seeing higher by about 0.5%. So that's one of the ones that we're going to be keeping an eye on. Alongside carrying, by the way. So you are seeing some of the French luxury names actually outperforming, which again is not one that we often talk about that often, but to me that kind of screams rotation trade. To me, I'm also keeping an eye on some of the defense movers. Of course, BAE Systems is our early indication. We're still waiting for some of the German names to start to trade early on, Guy, but it's down about 2%. It looks like in the opening trades when you look at those BAE Systems. Is that kind of a pre-warning of what's to come when we see some of those other individual stocks in the defense space?
Let's watch some of the movers. Keep an eye on what is happening here. As Critty says, defense stocks are absolutely front and center this morning. We're going to be watching that space very, very carefully. But as you can see, if you've got good eyesight, it is some of the more defensive names that are coming through. Luxury is back. We're certainly seeing that coming through. It's interesting, though, that we are, as Critty says, seeing some of the tech names coming under pressure this morning. That is where the weight appears to be this morning. There's a few pharma names that are soft as well. So it's not a clear kind of an easy sort of to determine market, I think, this morning. You've also got to remember, we are right in the middle of August. Like, how clear a signal are these markets really sending?
Yeah, low volume, low liquidity. I think when we get some of that German pricing and more of the kind of Nordic defense names as well, we're going to see a little bit more kind of come through in this market. We'll keep you apprised as we get some of those opening trades hitting the wire. In the meantime, let's go right back to the macro. Goldman Sachs over the weekend lowering the probability of a U.S. recession next year from 25% to 20%, citing last week's retail sales and jobless claims data. But if the August payrolls report comes out as a positive, Chief Economist Jan Hatzius may actually tweak his view. Take a listen to what he had to say.
Conceivably, there can be points in the business cycle where you might want to say the 12-month forward probability is less than 15%. I'd be reluctant, though, given the political uncertainty and the uncertainty around economic policy, to go significantly below 15%.
All right, Goldman's chief economist, Jan Hatzius, they're speaking about it again over the weekend, 20%. If things look even better, that comes down to 15. Let's get another perspective here. Kareem Chadid, head of EMEA investment strategy over at BlackRock, joins us around the table. Kareem, is that argument plausible? Do you believe that recession risk is diminishing?
Well, we are still with the base case that there won't be a recession. And when I look at the events of the past few weeks and the numbers you mentioned last week with the retail sales, with the better jobless claims data, I do think it's pointing in that direction. So we have a softening. If we zoom out, we have a softening of the U.S. economic picture, but not a move towards recession. And even when you look at some of those labor market data, and of course we still have one more payrolls before the big September FOMC, even when you look at that labor market data, that pickup that we saw in unemployment, we don't see it as a sign of recession increasing. We just see it as a side effect of a bigger labor supply boost.
So what's your red flag here? If things are all looking great and rosy and the economy is expanding, there's no recession risk, as you say, what changes that view?
Well, of course, we had the pretty neat inflation number as well with the two-handle CPI, below 3% CPI release in the U.S. And this inflation has been the big theme of this year. So I think what changes that, and this is not a 1-2 month risk, it's more going into next year. Any signs of inflation reacceleration that are not really priced in by markets, I think, can lead to some volatility.
Volatility has come down really sharply. We saw that big spikes come back down again. The VIX has kind of completely tumbled back down to kind of almost where it was before. It's equity risk on again. That seems to be the trade of the last few days. Is that the right thing to do right now?
So we're still overweight U.S. equities. And even when we had the volatility earlier in August, and you're right, August we're back up 6%, I think, for U.S. equities now, despite all that volatility. We're still overweight equities, and we have our overweights biggest on the U.S. and Japan. And really, that is underscored by what we're seeing in earnings. Earnings season has almost wrapped up in the US, and we're starting to see signs of breadth beyond tech. So the numbers are in 2024 are looking a bit more diverse. It's not just tech, you also have healthcare doing well, a little bit of pickup in consumer sectors as well, although definitely still on the weaker side. Whereas 2023 was all about tech concentration.
Yep. What impact did the volatility event, though, have in terms of the way we should think about this market? You can't just ignore it. I agree. We completely round trip. We're kind of back to where we were before. Mm-hmm. Can we ignore that, though? Was there a signal in there that we should be maybe taking forward?
I think there's a couple of lessons there. First, around positioning. So we are still in an environment that is volatile, even though it's risk on. Yep. So we are overweight US equities, but volatility is higher than it used to be, pre-pandemic. And I think this is the type of market where you need to be aware of positioning, be aware of carry trades. The technical washout that we had in positions earlier in August, you had signs such as the net short yen futures that were getting quite extreme. So I think being on top of your positioning dashboards, your flows, your crowded positions is important in this environment.
So a technical washout, yes, and feels like the currency space, which kind of rippled effect into the stock space. Where's the crowded trade now?
So when we look at our positioning dashboard, tech still looks well owned. I wouldn't necessarily say it's crowded because earnings are still positive, because ultimately when you think about crowdedness, you also need to think about fundamentals, whether fundamentals back up that trade or not. Then when you look at some of the so when we look at the positioning washout that we had earlier in August, we do see that the majority of that has unwound. So things look decent now from a technical perspective, but I think you need to watch out for it going forward.
It's interesting that you talk about the tech space, because Deutsche Bank made a similar but almost contradictory argument in that they actually said that even though now the valuations are matching the earnings, they said that in a negative light, not a positive one, as you're highlighting. But I'm curious about the bond market story here, because it feels like so much of that money that was hedged, say, in Japanese assets, has basically piled in to the treasury market, pushing this yield lower. What is the ceiling here when it comes to the 10-year?
So we still look at the Treasury curve as a yield steepening view. So I do think that, we have some of that, the risks of yield curve steepening from here are clear, especially 10-year plus, as some of that money repatriates back to higher yields in Japan. So that foreign buyer of US Treasuries becomes less, and again, this is not going to happen in 1 week or two. It's more of a slow risk over time, which would point to a steeper yield curve. And then you also have higher fiscal spend that we're expecting from the US over the coming years, which adds to that yield curve steepening view.
A lot of the guests that have been coming on and sitting in that chair have been signaling that they like the defensive aspects of markets like the FTSE 100. What do you think?
So we upgraded UK equities because of that view. There's also a more stable policy backdrop in the UK, and you've started to see it in the flows as well. So I analyze ETF flows forensically, and we've started to see a pickup even from foreign investors, so non-UK domiciled investors buying UK equity ETFs. Those defensive tilts in the FTSE 100, but also the financials tilt, which I know it might sound funny to talk about financials in the context of a rate cutting cycle, but this is not the old style of rate cutting all the way back to zero. So we do think that higher rates for longer, even with the rate cutting cycle, would still support the banks and the financials.
Okay, let's try and answer that question. Where do you think rates do end up? And what do you think the market is positioned for now? And what do you think the reality of the situation is going to look like? How far can the UK cut rates?
So with the UK, when we look at the market pricing for rate cuts, which is still under 2 by year end, and we already had one cut behind us, that still looks a little bit on the hawkish side, especially when you compare it to the other major central banks and the pricing of the ECB, the Fed. The BOE pricing remains the most hawkish of the three, which doesn't feel very justified. Sure, the UK data, there's some brightness in the economic outlook, such as the numbers we got this morning, but you have inflation coming down, and inflation has hit the 2% target. It could reaccelerate from here, but it has hit the 2% target. So we do see room for the BOE to deliver on that market pricing and even go a little bit further, which is a tailwind for UK assets.
It's interesting that we're talking about cuts being priced in for the BOE, talking about weakness perhaps in the UK economy, and yet you're looking at cable at 129, arguably 130. You're looking at the euro at 110. Walk us through the mismatch, or what it feels like is a mismatch between the economics and the safe haven aspect almost of the pound.
Yeah, I mean, I think the pound, there's an element of that rate pricing. So when you have a bit more, less of a dovish pricing, that can feed through to the interest rate differentials, which supports the pound. There is also a reduced political risk premium that helps the pound do better, because markets typically trade on uncertainty. So when you have higher election uncertainty, that weighs on the FX. When you have lower election uncertainty or a more certain outcome, that also reduces the risk premium, which leads to some bids in the currency.
So is the strength that you're seeing, are we still talking about this kind of labor honeymoon? Is that what's happening here?
Well, that, and also I think that the tailwind for the UK, because yes, the UK, the starting backdrop is that the UK is coming from a weak spot in the economy, but here, this is the typical thing with markets where if expectations are really poor, less bad news tends to be good news. And this is, I think, how we can talk about the UK data that we're seeing.
Grim, nice to see you. We'll see how it goes. It's going to be an interesting week. Kerem Chidid, head of EMEA Investment Strategy, joining us from BlackRock. Let's take some of the core stocks that we watch here in Europe to get an idea of what is happening. This is what the picture looks like this morning. As you can see, luxury seems to be on the front foot. You've got LVMH and Ferrari both tracking a little bit higher. Elsewhere, weakness in the pharmaceutical space. You've got Novo softer again, but also, as we've been highlighting, weakness in some of the tech names too. You've got ASML a little softer, Schneider in this kind of the data center trade a little softer as well. You've also got some of the defense stocks a little softer. Let's find out the details of what is happening there. Joe Easton, back over to you.
So as you say, Guy, all of these stocks really weak today. We're seeing Rheinmetall down around 4%, Hensoldt in Germany as well, and Renk, all the German names down more than 3% at the moment. This coming from this story in the weekend press that potentially Germany could be looking to rein in spending in terms of the money that goes to Ukraine. We'll have to wait on some official confirmation of that, but that was the report. We can see those shares really heading lower, and it's also feeding through into the other European names as well, in London and Sweden as well. We've got Thales on the screen there, that one over in France, down almost 2%. BAE Systems in the UK, Saab as well. All of these shares lower on this report. Obviously, it is an ongoing situation. We'll wait to see how that develops. But defence clearly under pressure this morning. And we're going to take a look at another stock under massive pressure. This is Varta, absolutely hammered, down almost 80%. Now, they have got this share placing, this investment from Porsche and also the majority holder, but it means massive dilution for existing shareholders. A lot of them are going to get wiped out. This is the German battery maker that's got big debt problems at the moment, making the AirPod batteries, also potentially looking at EVs as well, but absolutely hammered. It's a dilution for shareholders. Now, this one a little bit off radar, but we've got DSM in Amsterdam and Kering in Paris going the opposite directions because there is a technical adjustment on a couple of indexes from stocks. I'm waiting to get confirmation officially, but traders telling me this is to do with an index adjustment that will see Kering potentially stay in one of the key indexes and DSM miss out. That's what traders have pointed to, but a couple of the biggest movers on the stock 600 today. Then we got plus 500. This is the UK CFD trading company saying that they're seeing an increase in demand due to the higher volatility that we've seen over the past couple of weeks, and they're actually doing a big share buyback. They've got around $1 billion on the books at the moment, allowing them to return more cash. That's the best performer in the UK today, up 5%. It was up 7% at the open, so a decent move on that one. Then we've got a couple of morning calls. ArcelorMittal gets an upgrade at Barclays. That one's been hammered by the Chinese real estate issues. It's a steel maker, one of the biggest steel makers, and that could potentially mean some value in the shares, down around 20% over the past month. And then Nexans over in Paris, it's cable manufacturing. Exane, oh, excuse me, I'm getting my brokers wrong there. It's Goldman Sachs downgrading that one. Downgrading Nexans in Paris. That one's down 3% thanks to Goldman, and that's a big move over in Paris this morning.
All right, Joe Easton from our equities team, we thank you so much for walking us through some of the major moves that we've got. I mean, to me, it's still all about the defense story, Guy, that we are starting to see this major move. Of course, the German defense makers taking a bigger hit than some of their peers across Europe, but that is the sector underperforming this morning.
It is. It's had a great run. I think context is always really important here. These stocks are up massively this year. In the context of that move, the move this morning are relatively small. So after such a great run, any kind of a wrinkle is going to cause problems for these stocks. And you are certainly seeing that this morning in terms of the performance that you're seeing on the screen in front of you. As you can see, Rheinmetall down by 3.8%, 3.9% right now. In terms of the volume expectation today, it is likely to be quite an interesting one. Actually, maybe we'll see a little bit of a tick up going in towards the end of the week. I think it's going to be a relatively quiet start.
We should also mention, just from a macro perspective, traditionally when you have these kind of German budget conversations, the fact that these conversations are done and cleared up and locked away should be a positive for the market from an index level, and we're not seeing that this morning.
No, we're certainly not seeing that this morning. There are other things going on as well.
Yeah.
You've had a really great run. Again, just the context is important. You've had a really great run. Stocks have had a really good move over the last few days. They bounced back really strongly. Volatility has gone. The VIX went up to 60. It's come back down to less than 15. It's a kind of more of a risk-on environment. Volume's a little bit low, so you can push things around a little bit more. So it's interesting to see what is happening here and how the traders have responded and come back into this market. So the signal, I think, here is fascinating. You've got that kind of tailwind. You've got mid-August. You've got some of the politics stories being folded in as well. Yeah. You're going to get more of that later on this week. I don't know. Monday morning, I think it's a really difficult week to read.
It's a light volume, it's light liquidity, to your point, and I think that's probably why the bond market and even the currency market actually feels like you're seeing bigger moves there. A 145.7 on dollar yen here, 110, 129 on euro and cable, respectively. Those feel like pretty big moves, given that no one really may be at their desk this morning. I think it speaks to that kind of autopilot story.
Yeah, market continues to answer the question, which is going to move the market more, Powell or Ueda. I think at the moment it feels like the yen is the story.
Yeah.
Yen is on the front foot. That is where we should be watching the action. In terms of the single stock story, I want to take you back to what is happening with the auto space as well. We've had this battery story out of Germany that we need to focus on. Varta set to get a little bit of a recharge. Porsche agreeing to invest in the troubled battery company. It kind of needs to in some ways. We'll get more details on what is happening here. Plus, it's a big week also for Chinese automakers as well. The EV makers will focus in on that story as well as head of their corporate reports coming thick and fast throughout this week. That's next. This is Bloomberg.
Welcome to the world of decentralized finance.
With a surge in Bitcoin, you have crypto stocks also surging.
Bloomberg's covering all things crypto, the people.
This is a political attack, and we must hold our elected officials accountable.
The transactions.
Really a record-breaking moment.
Bitcoin is the exit strategy.
And the technology.
Awareness is going to grow, and these things grow the overall industry.
Crypto as an asset class is here to stay.
Bloomberg Crypto, only on Bloomberg.
This is Bloomberg News Now.
News when you want it at the touch of a button.
Another volatile day on Wall Street. We're seeing big moves.
All eyes on Capitol Hill as Democrats and Republicans prepare.
Today's job numbers casting doubt on the Fed's next move. Inflation remains front and center. And that's news when you want it with Bloomberg News Now. Get it 24/7 on the Bloomberg Business app, Bloomberg.com, and anywhere you get your podcasts.
Bloomberg News Now. Context changes everything.
From our studios in New York and San Francisco, our expert hosts have the data and analysis about the companies you know and the startups to watch, plus the interviews you don't want to miss. Watch Caroline Hyde and Ed Ludlow on Bloomberg Technology, the only daily business show dedicated to tech, right in the middle of the trading action, every weekday, only on Bloomberg Television. Context changes everything. It's a multi-trillion-dollar industry. We'll show you what's happening in ETFs like no one else. Bloomberg ETF IQ, Monday on Bloomberg. This week, Bloomberg is live at the Jackson Hole Economic Symposium, bringing you news and interviews with Fed leaders and other economic experts. Tune in for continuing coverage leading up to a special episode of Surveillance August 23rd at 9 a.m.
21 minutes into the equity market session, this is the picture you see in front of you. You have to bear in mind the context of last week, which was incredibly strong from an equity point of view. Today we hold our ground, we wait, we look for the next catalyst to come through. You are seeing movements in defense stocks this morning. That is one of the stories we'll come back to and keep you updated as to why we're seeing what we're seeing this morning. It all relates back to the German budget and German defense spending, particularly on Ukraine. There's another German story, though, that we should probably be focusing on too. Porsche has agreed to become a shareholder in Varta. Now, this is providing fresh cash to this embattled German battery maker. It's part of a debt restructuring deal with Varta's lenders. Let's get an update on what is happening here. Danny Lee joins us. Danny, walk us through what is happening here and why Porsche is having to make this move to protect its relationship with Varta.
Yeah, this is Porsche having trouble yet with another supplier. This time what it's doing is rescuing Varta from effectively financial peril and solving an issue that has been rumbling on for many months now with relation to Varta, which helps supplies batteries. And so it's a fascinating turnaround for a German stock, a green stock that had so much promise and at one point was worth over 5 billion euro, but right now it's worth around 165 million. And with this deal done with Porsche, Porsche will take a 32% stake alongside Varta's majority owner. The other lenders will carve out the rest of the shares there as well. But yeah, it's really fascinating because of the broader troubles we are seeing with battery makers in Europe. There's weaker EV demand, and therefore it's hurting the commitments, the billions that had been laid out in promises to invest and localize in production of EV batteries in Europe. And therefore, someone like Porsche is trying to protect its position, particularly where it wants to have better control of its own supplies and a future supply chain.
How much of a function of the tariff story is this, Danny, especially when we're talking about these ion batteries being one of the top exports coming out of China altogether? How much of this is a reaction or some sort of kind of protection against the impact of tariffs in the future?
Yeah, it is fascinating. And I think for the Chinese battery makers who continue to look at investing in Europe to localize, it's a bit of a weak spot for the kind of native European companies who've got to come from a very low base to try and catch up. And we see the impact of EU tariffs already on Chinese EV brands. And we see a data point suggesting a 45% cut in sales month on month from now, where we see tariffs starting in July. So clearly there is a bit of an impact there. And it's probably good news for Brussels that there's a bit of a discouragement there for sales of Chinese imports.
Danny, let's talk about the Chinese automakers in a little bit more detail. We're going to see a lot of earnings numbers coming through this week. What clues should we be watching out for in terms of who's ahead, where the strength is coming through from, and how these companies maybe are positioning for a more aggressive tariff story from the rest of the world?
Yeah, I mean, we've seen a couple of Chinese car companies, particularly XPeng, and we've also seen Geely. They've both been looking at Europe as a source of growth. I think the challenge here is where someone like Geely, who has been very much looking at exports as a big growth point, they now have to rethink and reassess what these EU tariffs mean. And because where they were producing out of China to export into somewhere like Europe, they now had to think, how did we re-accelerate our plans to maybe enter Europe and do more production locally? So clearly, what the management has to say of these companies and how they will adapt in the future will be fascinating.
Danny, let's just flip this around a little bit. The European companies have for a while now seen China as being a huge source of revenue growth. And I'm wondering whether or not that continues. One of the papers this morning, I can't remember which one, was posing the question whether or not China has become a black hole effectively for European car companies. Huge investments already gone in there. Given what we're going to learn this week about the strength of the Chinese automakers, how big a problem is China for the European manufacturers?
China is a real problem when you look at how the European automakers have had such a lead over the Chinese brand for many, many years, but are now putting their heads into the sand, right? Because they don't necessarily have an EV strategy, not in Europe, not in China, but how to necessarily adapt to this fast-changing pace of consumers in China wanting EVs over combustion engine cars. And so, where we have seen them rely so much on earnings to help prop up profits, this is now not the case. It's not just for European automakers, it's also for the Americans as well. So it's a real inflection point moment here. And when you see even these Chinese EV makers still losing money, they're still in a better position. And this is why the Chinese automakers such as Volkswagen have invested in the likes of XPeng.
Danny, great to catch up. Thanks for the update. Really appreciate it. Bloomberg's Danny Lee. What are we going to talk about next? Democrats are heading for Chicago. It's the national convention. We're going to be joined by an ex-Obama official, Brett Bruen, to discuss the race for the White House, plus also who are the key officials within the Harris camp that Europe needs to be paying attention to. That conversation next. This is Bloomberg.
Names in tech are on Bloomberg.
I don't like anthropomorphizing AI. I sort of believe it's a tool. It is got intelligence, if you want to give it that as moniker, but it's not the same intelligence that I have.
I especially am afraid of whenever it's some kind of AI is speaking for me. I want to be myself, and I want to be the one speaking. I have AI myself. Yeah. Actual intelligence.
This industry of producing intelligence is one of the greatest opportunities I've ever seen. Instead of instruction-driven computing, it's now intention-driven computing.
There's been a lot of us who've been working in AI for a long time. It's great now to see other people using it and seeing what some of the challenges are.
To stay ahead in tech, it has to be much more than just software. So you need long-term investments in science and research.
You have an ecosystem of companies coming together. It's causing a new industrial revolution.
Nobody covers technology like Bloomberg. Context changes everything.
Morning, this is Bloomberg Daybreak Europe. I'm Tom McKenzie in London. These are the stories that set your agenda.
Taking you from the U.S. market's close to the overnight session in Asia. We'll walk you through what you need to know to kickstart the European trading day. Live from our European headquarters, we bring you the day's top market-moving stories, unmatched expert analysis, and on-the-ground reporting from across the continent. Tune in every weekday at 6 a.m. London time, only on Bloomberg Television. The countdown is on. Everything you need to get the edge at the end of the market day.
Big tech earnings kick off later this afternoon.
Gilead is coming out right now.
We have take two numbers. Back to the markets, right? Our bread and butter.
NVIDIA is one of the best stories in the tech space.
That actually matters a whole lot more.
It might shock some of your viewers.
You're watching The Close.
Get ahead of tomorrow's trading with The Close. Weekdays on Bloomberg. Context changes everything. Bloomberg Surveillance covers the latest in global markets and the political events that influence your world. Join Jonathan Farrell, Lisa Abramowitz, and Anne-Marie Hordern only on Bloomberg. Context changes everything.
We are about 30 minutes into the European trading session. You're kind of seeing a little bit of mixed markets picture when you look at the broader indexes. The stock 600 is basically flat right now. You are seeing underperformance, of course, in the German stocks. A lot of that has to do with the defense sector. Of course, we're keeping an eye on what that actually means. Is it light volume? Is it low liquidity? There's a lot going on, especially as we build up to Jackson Hole later this week. That's just, of course, is one aspect of some of the stories we're following. We're also, Guy, following a lot of the politics going on, not just in Germany, but in the U.S.
I don't know what the catalyst is going to be this week, but it's going to be fascinating to see what it ultimately proves to be. You've got a week that is starting with European equities basically sitting on their hands. Maybe a reaction, as you say, in the defense stock story. You've got a yen, though, that is aggressively on the move. The Japanese yen is up by 1.25% against the dollar this morning. You've got, therefore, a big focus, maybe potentially, on this idea that UADA is hawkish come Friday. You've got Powell speaking at Jackson Hole as well Friday. That's going to be fascinating. But the politics is also in the mix as well. You've got the DNC, you've got Chicago coming up. That's going to be a huge event as well. Europe is really going to be paying attention to what we hear from the Harris camp.
And we've already gotten some kind of hints of that over the weekend in terms of what that Kamala Harris economic policy actually looks like, how much of it is a carryover from Joe Biden. Just take a listen to what she had to say, plus the criticism she's received.
We all know that prices went up during the pandemic when the supply chains shut down and failed. But our supply chains have now improved, and prices are still too high.
She's going to the Soviet Union playbook to lower prices called price control. She wants to eliminate private health care. She's for reparations. She's against fracking. She's for the Green New Deal, on and on and on. So I would make it about policy. A nightmare for Harris is to defend her policy choices.
And defending her policy choices is exactly what she now has to do. Of course, we heard there from Kamala Harris, Democratic candidate and the current vice president. Speaking in the swing state of Pennsylvania and Republican Senator Lindsey Graham, let's get a little bit more context here on what we're looking at. Joining us now around the table, Brett Bruen, White House Global Engagement Director under President Obama, now President of Communications Consultancy Global Situation Room. Thank you so much, Brett, for joining us this morning. This is fascinating. And from an economic perspective, there have been mixed reactions to this kind of fighting against price gouging policy that she's laying out, to some mixed results. Is this what's going to get her this presidency?
Look, what Harris is doing is very strategic. She wanted to put out not a complex theory, but some very concrete pieces that voters, especially voters in those battleground states, can relate to. They can relate to a child tax credit. They can relate to the price gouging issue. Now, the details matter here, obviously, for the viewers of Bloomberg. But ultimately, what Harris has done is put a stake in the ground and say, I'm not going to cede populism to Donald Trump.
This feels like a little bit of a continuation of what President Biden was trying to do when it comes to things like drug pricing in particular. And this seems like a little bit of an expansion of that. In terms of other policy items, as we get them trickled out, how similar could her agenda be to that of President Biden?
I think she is going to hew close to Biden, but she's also going to create some distance because, one, voters and I think a lot of the policymakers want to see what Harris is going to do distinctly and hopefully also learning from some of the lessons that Biden has, quite frankly, not delivered on. And those include on key economic issues. I think Harris indicated already she may take a different approach when it comes to Silicon Valley. She may take a different approach when it comes to cracking down on some of the efforts at mergers. All of that will be good news for Wall Street because she is going to not be the same kind of Scranton Joe Biden presidency that we've seen for the last 4 years. Instead, it will be a new and improved version, 2.0 of Biden-Harris. And I think, quite frankly, a lot of business leaders are encouraged by what they are seeing, apart from, obviously, some of the individual announcements that rolled out last week.
Is she better at selling Bidenomics?
Without question. And here's the key thing. As a Democrat for the last 16 years, I've been frustrated that our messaging just hasn't broken through. And it's what Trump was able to do so effectively. And when she came out, went to Wilmington, talked to the now Harris presidential campaign and said, I'm a prosecutor, he's a felon. That was the clearest, the most compelling communications that I had seen out of this White House in a long time. And then she added Tim Walz, somebody who invented the term weird, which is a term
But that's about the messaging. But I want to talk about the economic policy. The economic policy that Biden has delivered, in some ways, has not translated into how the public perceive him and his administration. True. Is she better at delivering on the messaging around the economics? All the other stuff, let's park that for a moment. But just in terms of that economic message getting through.
I think you're seeing it on the campaign trail. I mean, the fact just yesterday, she's out at a gas station buying Doritos, buying drinks. That's the kind of thing that we have not seen enough of from President Biden. And I think, it obviously had a lot to do with his age, a lot to do with an uncomfortableness that he had in getting close. He was a detached president. What I think you're going to see from Kamala Harris is somebody who is going to get closer to the people, and that, quite frankly, will help a lot in selling it.
I want to bring back to a point that you made when we kicked off the segment, which is that some of her policies may be a little bit more Wall Street friendly. The critics of that argument would say that, in fact, President Trump was great for the economy and President Trump was great for markets. And a lot of his moves to kind of decentralize some of the powers that be or even decentralize some of that regulation is a no-brainer for Wall Street and the broader U.S. economy. How does Kamala fight that?
Well, I think you got to take the full picture, and that is there's a whole lot of instability that comes with a President Trump, especially President Trump version 2.0, because we've seen that inconsistency. We've seen that inability for business leaders to take it to the bank, because he can change from one tweet to the next, from one moment to the next, and he's gotten even more erratic. So hopefully, what we're going to see from a President Harris is an effort to improve upon some of the economic populism and policies that Biden has had, while at the same time, I think, trying to ensure that there is a stability, there's a strategy to it, because those elements are missing. For all of the positive things that Wall Street sees in President Trump, there are also a whole lot of negatives, not least of which his policy towards the global community, which he was at a moment's notice ready to sanction somebody because they didn't flatter him enough.
Consistency is, for the record, fair, a fair point, and certainly a benefit for President Biden and for Kamala Harris. That's been widely recorded. But someone also would argue that from an economic perspective, the way Joe Biden has carried on some of President Trump's policies when it comes to China, when it comes to the Inflation Reduction Act as well, has actually created more ill will to the United States. Do you think Kamala Harris will continue some of that?
Look, I think there is certainly a very cogent foreign policy argument to say that Biden has not, in fact, delivered on his America's back on the world stage message. We've seen from Afghanistan to the immigration issues that Biden has had a pretty spotty record, and one that I've been openly critical of. On the other hand, I think what we have seen is an effort to return to normal order, so that international institutions, so that some of our treaty obligations are respected, because one of the problems was that Trump could not be trusted. And I think Biden has at least restored a modicum of trust, and that Harris would continue that.
Who should we be listening to here in Europe within the camp? Is it going to be continuation of some of the key officials out of the Biden administration? Who behind the scenes should Europe be talking to?
Well, Phil Gordon, namely Kamala Harris's current national security advisor, I think somebody who has become a trusted advisor. And her circle is not that big, and she is only now starting to expand her own group of advisors. But I would also say, and this is an important feature of American administrations, you're going to have a turnover. Tony Blinken, Avril Haines, Lloyd Austin, they are not staying on for a second term. So start looking
If they were asked, would they be? Do you think whose choice is that? Is that their choice or President Harris, where she become President Harris?
I think if Biden was staying, you might see someone. I served with Tony in the Obama NSC. He was Biden's national security advisor during the Obama administration. I think we would have seen some of them stay on. Harris is going to want a different set of faces. She's going to want different expertise.
Why? Why does she want different expertise when it comes to foreign relations?
Well, part of it is the optics. You want to change. We're not going to carry on with the same policy on Israel. We're not going to carry on with the same policy that has been so unpopular. So, nonetheless, there is a group of Democratic national security officials, and I think the likes of folks that are going to be coming over from the Capitol Hill, members of Congress. We saw this in a number of cases in the Biden administration, folks like Cedric Richmond, who came in from Congress. And let's also bear in mind, she comes from California. A number of those key California leaders, up to and including Gavin Newsom, could find themselves all of a sudden national figures in a Harris administration.
When we talk about kind of the points that she has to make in the DNC today, or this week, I should say, during this convention, it feels like there's going to be a lot of pressure, yes, on her foreign policy record, perhaps, and her domestic policy, but also when it comes to the immigration story. I think President Trump is going to go lobby at the border, I want to say either today or tomorrow. How does she fight that? That's, of course, a hot-button topic for both sides of the aisle.
The way she fights it, quite frankly, is not to play defense, but to play offense. And you've seen that start to play out, where she's leaning on her role as having been Attorney General of California, having prosecuted a number of those criminals who crossed over from Mexico. You're going to hear more of that. And that is what is a marked change from the communications we've gotten from the Biden White House over the last 4 years, because they have been playing defense. They've been on Trump's terms. And now all of a sudden, Harris can take the initiative and say, those aren't necessarily my policies. Let me tell you about what I have done as a prosecutor, as Attorney General. And so she's able to embrace in a way that a lot of Democrats have struggled to, that tough on crime mantra.
But the majority of immigrants crossing the border aren't criminals. They're migrants. They're looking for work. They're escaping war zones, basically, in a lot of Central America. It's still unclear what she's doing to actually create homes for them. I can appreciate the criminal aspect, and 100% her record shows that she's quite strong on that, but that's not addressing the majority of the issue.
And this has been a point of tension for Democrats. You have Mayor Eric Adams in New York who's saying, I just can't take any more of the migrants that are getting bussed up from the border. And we don't yet, as a party or as a policy, have a good solution to that. I think part of it is what Vice President Harris has been working on, trying to deal with some of the root causes of migration, not least of which is the situation in Venezuela.
What's going to win the election for her? Where is this election going to be won?
I think this comes down, quite frankly, to Wisconsin, Michigan, Pennsylvania.
Where within those states? Key voter demographics?
It is the suburbs of Milwaukee. It's suburbs around Detroit, Pittsburgh, and Philadelphia.
And what is her message? What should her message be to those areas? As soon as I was reading some stuff about Pennsylvania and the Latino community, and the fact that she is at least communicating with them in the way that maybe Trump isn't at the moment. What is the message that she needs to take to these communities, and how different is it?
If you look at those communities, I think the key thing that they want to know is that she is going to deliver on the economy, not just when it comes...
It is still the economy, yeah.
Still the economy. Secondly, reproductive rights. There is a lot of concern in those suburban communities, including in Republican households, of some of the things that we have seen from the Republicans trying to push not just bans on abortion, bans on things like in vitro fertilization. That resonates with suburban households who say, what's going to happen if, my daughter, if my cousin, if my friend finds themselves in that sort of situation? And then lastly, I think that she has to have a strong crime policy, because that has been an issue that Trump has been able to whack the Democrats over the head for over the last several of years.
How does she appeal to the voters in Dearborn, specifically when that's been the blind spot, or at least the Achilles heel, it feels like, for President Biden? For international audiences, this is the city that has the largest Muslim population in the United States, has been largely boycotting, I would say, President Biden, which has been kind of a win in the previous election cycles because of the aid to Israel and the war in Gaza. How does Kamala Harris repair some of the damage there?
The way she has been doing it is outreaching, saying, I'm willing to meet, I'm willing to talk, I'm willing to work towards, in my current capacity as vice president and once I become president, that enduring ceasefire. The other way she does it is say, look at the alternative. We have a candidate who has embraced Benjamin Netanyahu in a way that is unprecedented, a way that, quite frankly, is imbalanced in how the United States should be showing up in the Middle East. And so while, yes, there is enormous frustration in the Arab American community with the Biden policy, Harris has the luxury. And I think this is an important point as we also watch what's taking place today and this week in the Middle East. Biden now has a freer hand. He can go to Netanyahu and say, I don't have to justify what I'm doing out on the campaign trail. And at the same time, Harris can detach herself from some of the things that Biden is doing, which allows more leverage in those ceasefire talks, which is why I'm confident that in the next several days, I think we get there.
A final question to you on, I think, the top story out of Europe this morning, which is that Germany is pulling back some of the aid to Ukraine. Already members of the Trump campaign are saying, if they're not paying, why should we? At what point does the Democratic Party start to think in the same way, especially when economy, inflation, and money basically towards war zones has become such a hot topic issue? At what point does the Democratic Party also look at Germany saying, Europe's largest economy isn't helping out with the war effort, why should we?
Well, let me start with Olaf Scholz needs to go back and revisit this decision, because you cannot be the largest economy in Europe and decide that you're going to save a few euros by trying to cut back on Ukraine, particularly at a critical time. And this is a moment for Harris to show strong global leadership and call out Germany and say, if you want to be considered such a vital partner in not just issues on the European continent, but elsewhere, you have to show up. And we have been carrying your water here in the United States, saying that European allies are doing enough. And for you to pull back at this critical time undercuts me, it undercuts your efforts to try and assert more European influence.
A fascinating conversation. Brett Bruin, president of Global Situation Room, and of course, a former employee, I should say, or a member of the Obama administration. We thank you so much for joining the program. More coming up next. Stick with us. This is Bloomberg.
What about quantum computing? People talk about that. Is that something that I should be looking at investing in?
I've made a lot of mistakes, betting on these new technologies like AR, VR turns out to be not so big, 3D printing turns out to be not so big. My estimate is $100 trillion was invested in today's dollar in the PC, CPU-based infrastructure. All this is going to get ripped out to put $100 trillion or more in now a GPU-based infrastructure. In that sort of quantum of numbers, I feel that the quantum computing is going to be very small.
You always are worried about, I presume, geopolitical events. So are there some geopolitical events you're worried about right now?
Yes. I don't know why, but for some reason, I love thinking about black swans. And at the office, everybody thinks I'm weird because I'm always thinking about what can go wrong. But underpinning the AI is the chips. And the chips, despite the CHIP Act, which I think was a good idea for the US, I still think like 80% or so of the capex of TSM is in Taiwan. And so at the leading edge, a lot of capacity is in one very small area. Forget that it's just in China, it's in a very small area. I think that's very risky.
Middle East and Africa, vibrant resources and high-yield investment opportunities abound. Join me on Horizons Middle East and Africa for the stories, newsmakers, and insight from this exciting region. Now weekdays, only on Bloomberg.
Bloomberg loves earnings.
I know it's like your Super Bowl, right?
I can't wait. It's like opening presents in the morning.
All right, it will be exciting.
Nobody covers earnings like Bloomberg.
Welcome back. Monday session. We're drifting sideways. Not really a lot to talk about, certainly at an index level. Below the surface, though, there are things we should focus on. Certainly German defence stocks, European defence stocks are one area where we are seeing some movement this morning. This after reporting over the weekend suggesting that we're going to be seeing German aid for Ukraine, for defence spending in Ukraine, being put on hold. You can see the effect of this on the stock story this morning across Europe. Names like Rheinmetall are under pressure, down by 4.5%. Context here, though, is important. As ever, these stocks have had a good run. Any wrinkle is going to therefore cause a maybe disproportionate effect on the stock price that we are seeing. Ollie Crook joins us now from Berlin. Ollie, how set in stone is this policy? How determined are the Germans to make sure, the German government at least, that we see maybe a halt being put on extra spending?
Yeah, Guy, I mean, listen, there's no question about whether or not there needs to be a hold on extra spending. There may be still some room to debate where it's going to come from. But again, this was at its root that constitutional crisis we had at the end of last year that basically reaffirmed the debt brake and all of its nuance and difficulty, meaning that the German government just doesn't have the flexibility that it thought it had. So it needs to make some tough decisions. We understand that sort of over the weekend in the last couple of weeks that the defense ministry was asking for an additional 4 billion euros to help fund Ukraine going into the future. And the finance ministry said basically no way. We're not going to give any additional money, new money, over to Ukraine, which, as your guest in the last couple of minutes was just pointing out, is a huge signal from Germany, not only because it's the sort of biggest economy in Europe and the leader within Europe on a lot of different topics, but it's the biggest supporter of Ukraine within Europe and the second biggest across the world. So if they're saying that they're not actually willing to put more money forward, that is a signal that is going to be heard by both allies and, of course, by Moscow. However, if we want to talk a little bit about the reaction on the stock front, we should also mention that this does not diminish Germany's ambitions in terms of its own military spending, because remember, apart from the budget, they've set aside 100 billion euros in a special fund that is off budget. That money will still be spent on its own military development, which says a lot of that's going to go to these defense companies anyway. But right now, probably that sort of full sentiment across the board is being sold off this morning in the session in terms of the defense stocks.
Well, the underperformance you mentioned definitely kind of centered or concentrated in Germany, but we're seeing some of the other defense stocks around Europe also sell off in Norway and Sweden, even right here in the UK as well. Ollie, what kind of precedent does this set for other countries in Europe?
But I think this also, speaks to the heart of the matter, and we've talked a lot about on this show with a number of the executives of these defense companies, right? Which is, where are the orders? We have a lot of talking about it. We have a lot of money, being sloshed around in these sort of funds to a certain degree. But these CEOs really need the order flow in order to build up their production capacity, all of these sorts of things. So again, if that money is not going to be going towards Ukraine and that sort of volume is not going to go towards Ukraine, it does bring into question what you actually are what they're actually going to do, what they're actually going to build out. So again, this has been at the heart of the conversation. We've talked to, the Saab CEO, a number of other executives about kind of where that money is going to go and if the orders are actually going to be there. I think at the end of the day, the reality of the situation is no matter what happens in the United States at the election, there is a consciousness within Europe that they need to hit at least that 2% spend. The question is, do they need to get closer to 2 or 4, so 3 or 4%? That is perhaps maybe in play, and if maybe the heat dies down on the pressures there, and some of the other economic woes start to take sort of more prominence in the front of the consciousness of politicians, then maybe that diminishes.
Ollie, great stuff. Thank you very much indeed for updating us and getting the details on this story straight. Ollie Crook joining us out of Berlin. Let's talk about the week that we've got coming up. In some ways, a quiet start. The DNC in Chicago begins. We've got Jackson Hole obviously starting early in the week as well, but they kind of crescendo late in the week. You've got Chinese EV sales to keep you busy between now and then. You've got rate decisions out of Sweden and Turkey. Turkey likely to deliver a fairly hawkish hold, we understand. You've got retail sales. You've got Target. You've got Macy's. Retail earnings. You've got Target, Macy's, and TJX out with numbers. You get a whole load of speakers as well. Panetta's going to be speaking. but it really kind of starts to get going Thursday, Friday. European PMIs, US PMIs, Thursday, Friday. Powell's going to be speaking, obviously, at Jackson Hole Friday, but you've also got the Bank of Japan's Ueda giving testimony in front of Parliament. This testimony coming after the recent rate hike that caused the turbulence around the world that we saw a couple of weeks back. Which of those two events is likely to move the market more? Let's try and get an answer to that question. Bloomberg's MLive strategist, Ben Rahm, joining us out of Dubai. Ben, given the price action that I'm seeing this morning in dollar-yen, what are we watching here? Which one should we be watching more? Is it Ueda or is it Powell?
I would watch Ueda more, Guy, because, you know, if you look at the pricing in the Fed futures contracts, the markets are pricing 100 basis points, still 100 basis points of rate cuts from the Fed by the end of the year. I think they're barking up the wrong tree. Why do I say that? Because, you know, the Fed is keen to take its rate to less restrictive levels, so they want to cut rates, but they are not going to throw caution to the winds and start cutting rates in jumbo moves, which is what the markets are pricing. So I think this is about accommodating a Goldilocks economy. The economy isn't calling out for rate cuts with great urgency just yet. So 100 basis points of rate cuts, I don't see it happening. If you shift yourself to Japan, what happens is the markets are pricing hardly any hikes from the BOJ. They're pricing 9 basis points of rate hikes from the BOJ by the end of this year and hardly even 25 basis points by the middle of next year. I think that is huge mispricing there. And I think that the BOJ is not going to rattle the markets, but they are going to raise rates. And probably another one is coming by the end of December. So as that pricing shifts, you will see nominal and real rate differentials move in favor of the yen. And that will alarm the markets if the yen starts moving higher, as it is moving today.
Yep, we're certainly seeing a big move this morning. We've also got CPI inflation data coming up at the back end of the week for the BOJ to digest as well. Ben, thank you very much indeed. Ben Rahm, Bloomberg, MLive strategist. That's it. So that's the week. It's Powell versus Ueda. Ben thinks it's Ueda.
There's plenty going on. There's positioning. There's economic data. I don't know. It feels like it's like
We got lots to talk about.
Lots going on. That does it for the opening trade. The Pulse is up next. This is Bloomberg.
From the beating heart of global finance, economics, and politics, and wherever newsmakers are moving markets, Bloomberg brings you conversations that allow for deep discussions and important insights. What do you think the future is for inflation? Is this new normal? Are markets too optimistic? How do you worry about the things that are outside your control? How does the current fighting completely stop? I'm Francine Lacqua, and this is The Pulse, every weekday only on Bloomberg.
Good morning. This is Bloomberg Surveillance.
Welcome back to the opening trade.
This is Bloomberg Technology.
This is the Asia trade.
You're watching the close.
Welcome to Balance of Power.
This is Bloomberg. Welcome to the world of decentralized finance.
With the surge in Bitcoin, you have crypto stocks also surging.
Bloomberg's covering all things crypto, the people.
This is a political attack, and we must hold our elected officials accountable.
The transactions.
Really a record-breaking moment.
Bitcoin is the exit strategy.
And the technology.
Awareness is going to grow, and these things grow the overall industry.
Crypto as an asset class is here to stay.
Bloomberg Crypto, only on Bloomberg. Bloomberg covers the world with unmatched reach and resources. From more than 120 countries, the moment news breaks, 24 hours a day. Bloomberg, context changes everything.
This is Bloomberg News Now.
News when you want it at the touch of a button.
Another volatile day on Wall Street. We're seeing big moves.
All eyes on Capitol Hill as Democrats and Republicans prepare.
Today's job numbers casting doubt on the Fed's next move. Inflation remains front and center. And that's news when you want it with Bloomberg News Now. Get it 24/7 on the Bloomberg Business app, Bloomberg.com, and anywhere you get your podcasts.
Bloomberg News Now. Context changes everything.
Wall Street is betting that Fed Chair Jay Powell will confirm rate cuts are coming at the central bank gathering in Jackson Hole this week. The U.S. Secretary of State, Antony Blinken, is expected to meet the Israeli Prime Minister Benjamin Netanyahu in Jerusalem this hour to press for a hostage and ceasefire deal with Hamas. Plus, U.S. Vice President Kamala Harris heads to Chicago to officially accept her party's presidential nomination at the Democratic National Convention. So we have a lot of news, everyone. Happy Monday. But first, let's take a look at the European markets map. Now, we're seeing a little bit of divergence across the board, but there's one thing in town that we're all watching. That, of course, is the Fed. With Jackson Hole, we're expecting a speech from Jay Powell. Now, it's not really a matter of when, but it's a matter of how big that cut can be, and any indication that we get from him in some of the confusing data that we had over the last couple of weeks. Now, S&P futures practically unchanged. This is a similar picture. After we had a bit of a bounce in Asia, it's a similar picture to what we saw here in Europe. The U.S. 10-year yield, 3.8654. We always look at yen after the 2 weeks that we've had where there's been a lot of debates and questions about a possible hike from BOJ, 146.19. And of course, we look at the Middle East with oil 79.09. So for the conversations that matter and the insights you need, let's get started.
Newsmakers and market movers. This is The Pulse with Francine Lacqua.
Good morning, everyone, and welcome to The Pulse. I'm Francine Lacqua here in London. Now, investors turning to the Fed's annual gathering at Jackson Hole this week to see how recent data on the U.S. economy will inform the central bank's path on interest rates. Well, joining us now is Louise Dudley, portfolio manager for global equities at Federated Hermes, and Noor Alali, Bloomberg Markets Live editor and strategist. So thank you both for joining us. It's exciting. It's Jackson Hole, and we're expecting, I don't know whether we're expecting too much of Jay Powell, because out of character, I mean, he's not the one, Nor, that, you know, will say this is exactly what I'm expecting, usually coy and cautious.
Yeah, absolutely. But look, we know from the last meeting that the Fed's Powell did say, you know, September could be that month where we see cuts coming. Fed's Daily came out and said maybe, you know, we are more comfortable with inflation figures coming out. And now I think the Fed will start now pointing to the fact that they may now look at their second mandate here, you know, especially with the economy and the jobs market not doing as well as we had hoped in the last months. So that we're going to start seeing that maybe feed in from the commentary. And look, traders are just waiting for that opportunity or just that sign that the Fed's Powell will say, okay, yes, it will absolutely cut in September. And the moment they get that sign, it's just a rally for equities and bonds, and of course, a further declines for the dollar. And we're seeing that move materialize just as we start this week.
What are you expecting, Louise, in terms of, again, an indication? Is the market to, you know, ahead of itself like it has been in the past?
I think it is. I think we've definitely seen the sentiment switch more because we moved to that potential 50 bips cut. The expectation is that there will be a cut. Whereas I think previously we were more of the expectation that it may not happen before the election, so that it may be put off. Whereas now people are definitely pricing 3 cuts, but I expect that it will be a stabilization and they won't want to rock and go for the 50. But definitely the wording will be very important in terms of what comes out. People are very assertive in terms of trading these days, and definitely on the retail side, people are looking to get back in ahead of the elections.
Louise, do you think he'll be very cautious and actually committing too much like he has in the past? And why is it so difficult to model what the interest rate cut hikes have been doing to the economy?
I think in this period, in terms of the election, they have to be very, very cautious. And they know that Trump will jump on anything if he can. And so I think that's why there's that extra level of not wanting to be too extreme in any direction, but to also be clear and stable, as I said.
Nora, what does this all mean for treasuries?
Look, I mean, I'm still going to hold my opinion that bonds are back. I've been beaten one too many times by this call, but I still believe that, whether or not the Fed cuts by 50 or a quarter point, as Luis is pointing out, is moot, right? We are expecting the Federal Reserve to begin its easing cycle. The ECB has done it, the Bank of England has done it, and now the Fed is there. I mean, it's quite unusual for these central banks to do so before the Fed. So September seems like the kind of month where they'd say, okay, fine, we'll start with that small cut just to get markets thinking we're not behind the curve. And then, in November, when we meet just days after the U.S. election, that's where I think now the debate is going to shift. Do we get a consecutive cut from the Fed? And obviously markets are as well really, betting on those 90 basis points of cut by December. We've pared back quite aggressively. We were expecting a full percentage point by December. Obviously, markets have really pared back those expectations. I do expect that we'll see a little bit more cuts priced in down the line, and that will ultimately feed into further gains for treasuries and bonds as well as a whole.
Luis, are you really confident that some of these fears around a U.S. recession are rightly eased? Because I know you have a couple of contrarian calls, but just in general, we talk about a Goldilocks scenario, but then it's kind of like out of whack 2 days afterwards.
Yeah, I think that we've seen the rebound come back so quickly that I think people reacted very quickly in terms of the sell-off. It's like end of day scenario. Things have come back. Things feel more measured now. We are still thinking, quality is important. A watch in terms of profitability is important. But yeah, I think in that medium term, there is definitely some volatility, and we're definitely looking to take advantage of some of those price moves. But we do expect things to be a bit more stable, and obviously the overall trajectory, I think, is still positive.
So where are you buying right now tactically?
So I think, we've always been quite overweight in terms of the tech, some of the large cap names, and I think some of those names are still offering some of the top growth opportunities. We're not as overweight as we were, but overall we still have a significant exposure. We also still have significant exposure in terms of that obesity trade. But looking to diversify again across that supply chain as well, because again, some of those numbers did get quite hot. And so we're looking for more of those kind of medium-term names, but very much focused now into 2025, strong pipelines, etc., and the onshoring trade as well within the US. So that industrials, we do expect those names to do well post-election.
Nora, talk to me a bit about BOJ. Can it still spook, those yen carry trades that have been put back on? I mean, it's only 2 weeks ago that we had the market really fall out of bed.
Yeah, absolutely. And the Japanese stocks really bared the brunt of that move, right? This morning, though, you are seeing the Japanese yen extending its gains now up about maybe 1.5% against the dollar. So it's really interesting. We still don't know to what extent that carry trade has to unwind, right? There's a lot of calls out there that, it's maybe gone too far, too fast. There was some adjustment last week, but so far what you've seen is hedge funds have turned bullish on the yen for the first time since 2021. That is feeding that sentiment broadly for the yen. And also, you've got that conversation that we've just had about the Fed and how that will feed into more declines for the dollar. So that's also feeding the yen, the havens as well. You've got Middle Eastern tensions as well. So there's a lot that's going on there that's helping that yen really help unwind that carry trade move even further. I think it's got further to go, but perhaps at a more measured pace. And of course, you've got the Bank of Japan that may come out and say, well, look, if those declines in the stock market really trigger that kind of fear that we saw just a couple of weeks ago, we may not be as aggressive as you would expect us to be. So a lot more measured commentary I would expect from the Bank of Japan.
Luis, do you see any opportunities in either Japanese equities or Japanese assets?
So we are generally kind of underweight and definitely looking for those international names rather than domestic. I think it's hard because we don't have very good visibility into Japan and where they are going to be. It's definitely not the most attractive area for us. We're also very conscious of how it trades alongside China as well. And, China, the news just keeps getting worse and worse, it seems. And it doesn't seem that there's going to be that support from the top-down perspective. So Japan very tied to that region. So, yeah, a little bit more cautious. That said, more on the kind of stable side. Definitely the large cap names continue to do well, invest a lot of money, which will filter down in terms of supply chains.
All right, thank you both for joining us. Louise Dudley there from Federated Hermes and Noor Al-Ali from Bloomberg Markets Live. Coming up, a big week for U.S. politics as Democrats head to Chicago for their national convention. So we'll bring you the latest next, and this is Bloomberg.
From our studios in New York and San Francisco, our expert hosts have the data and analysis about the companies you know and the startups to watch, plus the interviews you don't want to miss. Watch Caroline Hyde and Ed Ludlow on Bloomberg Technology, the only daily business show dedicated to tech, right in the middle of the trading action, every weekday, only on Bloomberg Television. Context changes everything. U.S. jobs numbers are released. Bloomberg has the report under surveillance with crucial data and expert analysis at terminal speed. Nobody covers jobs day like Bloomberg.
DOJ or other authorities
could face bigger challenges next.
It was going to keep Green World Cup. This is a 3
as the economic picture
covering the intersections of Hollywood, Silicon Valley.
This is Bloomberg Daybreak Europe. I'm Tom McKenzie in London. These are the stories that set your agenda.
Taking you from the U.S. market's close to the overnight session in Asia. We'll walk you through what you need to know to kickstart the European trading day. Live from our European headquarters, we bring you the day's top market-moving stories, unmatched expert analysis, and on-the-ground reporting from across the continent. Tune in every weekday at 6 a.m. London time, only on Bloomberg Television.
So, big week ahead for U.S. politics with the Democratic National Convention kicking off in Chicago later today. Speaking in Pennsylvania this weekend, Kamala Harris was not pulling any punches about the battle ahead.
We know our country is going to be as strong as our willingness to fight for it and to fight for what we stand for. When you know what you stand for, you know what to fight for.
However, Republican Senator Lindsey Graham was less than impressed, questioning Harris's economic policy.
She's going to the Soviet Union playbook to lower prices called price control. She wants to eliminate private health care. She's for reparations. She's against fracking. She's for the Green New Deal, on and on and on. So I would make it about policy. A nightmare for Harris is to defend her policy choices.
Well, let's bring in Bloomberg's Vonnie Quinn in Washington, D.C., and Stephanie Baker here in London. So thank you both for joining us. Vonnie, you're there. You're where the action is. What do the Democrats need to get out of this week?
Well, Francine, I would suggest that the momentum needs to continue to build, right? And if possible, for the Democrats to bring in new voters, potentially voters that will see what percolates out of the Chicago DNC, see Kamala Harris, who's presenting herself as a sort of a change election candidate, and see what she can bring them. Already we know that polling is directionally good for Democrats right now. It's in terms of favorability, Kamala Harris is really blowing it out of the park. Also in terms of in some key swing states, she is now edging Donald Trump in terms of polling. So Democrats will want to continue that momentum. We know that traditionally after the DNC, Democrats get a boost of about 2.1 percentage points. That's at least since the year 2000. They'll want that to continue. And just generally for Kamala Harris to also fundraise as well, right? There are a lot of events that are taking place in Chicago around this time. John Legend, Julia Louis-Dreyfus, they're all raising more money because 10 weeks, it's not that long, but if you're spending hundreds of millions of dollars and she's already pledged $370 million in advertising, well, that money needs to keep coming in.
Yeah, and Stephanie, I guess there's been a lot of talk about, Tim Walz, her vice president candidate, and he seems to be well-liked. He has this kind of Midwestern dad feel about him. But how good does she need to be in that speech on Thursday to really land it with the audience?
Yeah, I mean, for many voters, this will be the first time they really hear from Kamala Harris. I think we forget that a lot of people aren't as tuned in. So this will be her moment to deliver a big kind of values message, introduce herself to the electorate. She already rolled out an economic policy speech last week, which was criticized in a number of quarters. So she doesn't have to, load that speech with policy ideas. She can focus more on kind of telling her story and outlining her values and vision for the country.
Stephanie, we're just looking at pictures there. I think that came from Instagram from Tim Walz of him like handing over Doritos for the road trip. I mean, does the social media kind of relatable work? Is that going to win the swing states?
Tim Walz is so good on social media. It's just incredible. He's even better than Kamala on Instagram and TikTok. So I think he's got a lot of. He'll help her with those independent voters where she is weak. She's rebuilding in some ways the Obama coalition of 2008, but she's weaker with white men and those independent voters in swing states. So she's got to figure out a way to pull ahead on that front. And I think Walz is a key person that can help her do that.
Vonnie, Senator Lindsey Graham was basically saying stay away from personal attacks and focus on policy. Are we going to see a different Republican ticket?
Well, that's the question, Francine. It's actually quite interesting because the fact that he had to say that, and Donald Trump basically told his supporters as well that his aides were telling him not to go for the personal, to concentrate on policy, and he was sort of complaining. It shows how ununified the Republican Party is right now, right? It's a stark contrast to the unity message that the Democrats are putting out. Yes, of course, we're going to see attacks on policy. We have, as Stephanie said, already seen many attacks, most of the attacks actually on what Kamala Harris has come out with in terms of economic policy. But it's very interesting to see what Donald Trump's campaign has planned for this week, because there were no plans in the works, and suddenly he's now going to 3 key swing states, and in a couple of them Kamala Harris is actually leading in the polls, not statistically significantly, but nevertheless leading. North Carolina, for example, and also right now Pennsylvania, interestingly enough. He's also going to go to Michigan, but then on Thursday, the day that Kamala Harris actually formally accepts the nomination from her party, he is going to the border, which is where she's really perceived to be weak. He will be in Arizona. Right now, Kamala Harris is actually polling higher than Donald Trump in Arizona. She is about 5 percentage points, according to the latest New York Times Siena poll, which was just taken a few days ago. So that is fascinating. Arizona, by the way, also a state where abortion rights are going to be on the ballot. There are now enough signatures for that. So there's a lot of interesting dynamics going on in some of these, particularly Sun Belt swing states.
Stephanie, do you trust the polls? It feels like, 2-3 weeks ago, everyone was saying it's going to be really difficult for Kamala Harris to actually win this. And now the bets are that she's got this. Or is it too kind of volatile?
I think it is still too early. As we've seen from the past month, things can change, events can happen that, flip the script for both candidates. She still hasn't done a major interview. She's expected to do that after the convention. And I think that'll be a real test. The debate on September 10th is another potential turning point. And remember, the Democrats need to win big in order to win the Electoral College because of the way the Electoral College works. So, she needs to pull ahead by, well ahead percentage-wise in order to secure enough Electoral College votes to win the presidency.
Vonnie, how will Harris respond to these pro-Palestinian demonstrations scheduled all week?
Yeah, Francine, she obviously has already sort of told protesters in Washington, D.C. when Benjamin Netanyahu was here that she hears them and she sees them, but she is also very firmly supportive of the Biden administration stance on Israel. So we will have to see if she says anything publicly, if she, stops at some points to talk to them potentially even. We know that there are going to be demonstrations outside the Israeli consulate Tuesday night, for example, and there's a large march planned for this week as well. And those protesters will be loud. They have permission for loudspeakers and a stage and so on. At the same time, Kamala Harris told them that time in Washington, D.C., if they get rowdy or disruptive, she is not interested in that. And we know that she is constantly calling for a ceasefire. She is very well aware of the humanitarian plight of Gazans. And, it will be very interesting to see how the dynamics play out. She's bound to have to make some kind of a statement about the protests during the week.
And Stephanie, I'm excited about your book, which is basically on the Russian economy and the fact that Vladimir Putin changed the economy to go to war. There was a bizarre exchange where Donald Trump said he spoke to Vladimir Putin saying you shouldn't do this. This was in the past when he was president. Does that war play out in the U.S. election?
I think U.S. voters are not as focused on foreign policy, but I think it will be one of the key foreign policy issues in addition to Israel-Gaza. My book goes into the Biden administration's policy response and how they tried to implement sanctions to slow down Putin's war machine. That's a huge dividing line between Trump, who said he wants to end the war in a day, which will likely mean the lifting of sanctions, and the Harris camp, who I think is going to follow the Biden administration policy of staying tough on Russia and keeping those sanctions in place. I think it's going to come up at the debate on September 10th. I think they're going to cover foreign policy, and that will be a key dividing line between the two candidates.
Very quickly, because it also reminded me, Vladimir Putin in an interview said that he'd rather Donald Trump not be president. I mean, do we know what his preference is right now?
I think he's trolling. I don't think we can really trust what Putin says. He's got an agenda. I think he views Trump as unpredictable. I think he would rather have Trump because he knows that Trump is not as supportive of the sanctions, and J.D. Vance, for instance, has been very against aid for Ukraine. So I think it's pretty clear who Putin would really want in the White House. He does not want the current Biden-Harris policy to continue.
Thank you both for joining us, Stephanie Baker and Vonnie Quinn. Now, coming up, Israel and Hamas trade blame for impeding a ceasefire deal. Meanwhile, U.S. State Secretary Antony Blinken presses for agreement, meeting Benjamin Netanyahu today. That's next, and this is Bloomberg.
Is on. Everything you need to get the edge at the end of the market day.
Big tech earnings kick off later this afternoon.
Gilead is coming out right now.
We have take two numbers. Back to the markets, right? Our bread and butter.
NVIDIA is one of the best stories in the tech space.
That actually matters a whole lot more.
It might shock some of your viewers.
You're watching The Close.
Get ahead of tomorrow's trading with The Close. Weekdays on Bloomberg. Context changes everything.
Middle East and Africa. Vibrant resources and high-yield investment opportunities abound. Join me on Horizons Middle East and Africa for the stories, newsmakers, and insight from this exciting region. Now weekdays, only on Bloomberg.
From the beating heart of global finance, economics, and politics, and wherever newsmakers are moving markets, Bloomberg brings you conversations that allow for deep discussions and important insights. What do you think the future is for inflation? Is this a new normal? Are markets too optimistic? How do you worry about the things that are outside your control? How does the current fighting completely stop? I'm Francine Lacqua, and this is The Pulse, every weekday only on Bloomberg. The conversations that matter, the insights you need. This is The Pulse, and I'm Francine Lacqua here in London. Now, let's quickly look at some of the cross-asset checks that we should do on a daily basis. First of all, stocks posted small moves after last week's risk-on rally. Again, traders are waiting for signs on the scope of potential interest rate cuts from the Fed. S&P futures practically unchanged. You can see U.S. 10-year 38635 and then yen 146.1. Coming up, we'll be speaking to Ginny Yan, Chief China economist at ICBC Standard Bank, on concerns about an uneven recovery. This is Bloomberg.
Why does this business model work? Because it's virgin space. It's never been done before, and it'll never be done again. When you step back and you look at something that's been golf through institutions, has been the way it has been for 53 years without change. In 1993, I stepped back and said, okay, this is not right. It's doing the same old Groundhog Day. Everything's the same. Players are a pass-through entity. They're not getting any equity built in their day. Once they're done playing, they're out. I thought, that's just not right. When you have to build a sustainable model, you need to have these players, these famous, the world best, the best of the best. You need to give them equity into the future. You need to give them a vision of where they need to go and how they're going to get there.
Welcome to the world of decentralized finance.
With the surge in Bitcoin, you have crypto stocks also surging.
Bloomberg's covering all things crypto, the people.
This is a political attack, and we must hold our elected officials accountable.
The transactions.
Really a record-breaking moment.
Bitcoin is the exit strategy.
And the technology.
Awareness is going to grow, and these things grow the overall industry.
Crypto as an asset class is here to stay.
Bloomberg Crypto, only on Bloomberg. Fixed income fix. Watch Bloomberg Real Yield every Friday right here on Bloomberg. Context changes everything.
Good morning, everyone, and welcome to The Pulse. I'm Francine Lacroix here in London, and these are your top stories. Wall Street is betting that the Fed Chair, Jay Powell, will confirm rate cuts are coming at the central bank gathering in Jackson Hole this week. The U.S. Secretary of State, Antony Blinken, is expected to meet with the Israeli Prime Minister, Benjamin Netanyahu, in Jerusalem this hour to press for a hostage and ceasefire deal with Hamas. Plus, U.S. Vice President Kamala Harris heads to Chicago to officially accept her party's presidential nomination at the Democratic National Convention. So back to one of our top stories, and Israel and Hamas are blaming each other for impeding a ceasefire and hostage deal. Now, this comes as Antony Blinken has arrived in Tel Aviv to press for an agreement. Now, the U.S. Secretary of State is on his 9th visit to the region since war broke out last October and is set to meet with Israeli officials before traveling to Egypt. Well, for more on all of this, let's bring in Elisa Odenheimer, Bloomberg's Israeli breaking news editor. Elisa, thank you for joining us. So what exactly is at stake in the negotiations?
Hi, Francine. Good to be with you this morning. Well, if you remember, on October 7th, Hamas invaded southern Israel, killing about 1,200 people and taking 250 people hostage. Now, since then, some of the hostages were returned in an earlier ceasefire deal in November, but there are still about 115 hostages there. About 40 have already been declared dead, but the rest are assumed living. And these hostages include, in fact, 2 small children, one a year old and another 5 years old. They include people in their 80s, and of course other people who were wounded in the Hamas attack and so on. And so there's quite a bit of worry about their state of health. And so that is one part of the deal. The other part is the ceasefire for Gazans. You know, many who have been displaced from their homes and so on, and are living in temporary conditions. They're living in very difficult conditions. The ceasefire for some of them would mean that they could return home, and that's another part of it. Now, of course, Hamas is not willing. Of course, the deal doesn't ask Hamas to let the hostages go for free. The other part of the deal is that Israel would have to let Palestinian prisoners, many Palestinian prisoners, it said reportedly 50 prisoners per hostage out of the prisons, and many of these people are convicted of murdering Israelis in terrorist attacks. And that could be very, very difficult especially for the families of the victims of those people. So these are all some of the things that are at stake.
Yeah. So does it look like the sides will actually reach an agreement? And what happens if they don't?
Well, it's very unclear at this time whether or not they'll reach an agreement. On the one hand, there was a summit in Doha at the end of last week, and afterwards, Prime Minister Benjamin Netanyahu said that the Israeli negotiators were cautiously optimistic. On the other hand, he also has said since then that Israel is not willing to give, and that Hamas is being intransigent and obstinate. And Hamas, for its part, is of course saying that Israel is not playing fair, and that it's asking for more and more conditions. Now, one of the big items in being negotiated is the Philadelphia corridor. That is a road that runs between, basically on the border between Gaza and Egypt. And according to Israel, much of the weapons that Hamas has came in from across that underground tunnels across that corridor. So Israel is asking to hold on to it even during the ceasefire, and Hamas is reportedly not willing for that. And then another big problem is a road that runs in the middle of Gaza, across the middle of it, Hamas wants those who have been displaced from the north to be able to go back to the north, and Israel does not want to allow people to go back without being checked by the army, and Hamas is not willing to allow this, reportedly.
Elisa, thank you so much for that. And of course, this is a story that we'll be following very closely throughout the day. Again, as Antony Blinken has also just arrived in Tel Aviv, Elisa Odenheimer, Bloomberg's Israel Breaking News editor. Now on to China, and its president says he wants to build strong ties with Vietnam as the country's leader visits Beijing to discuss trade. It's happening as economic data released last week reinforced concerns about sluggish growth in China. Well, Ginny Yang, a chief China economist, the ICBC Standard Bank, joins us now. Ginny, so good to speak to you. There's been so many questions on China, whether we're misunderstanding it, whether there's more weakness than actually the markets even think. What do you see as the main worry in China right now?
Well, there are lots of concerns about China for sure. And that really is telling us it's becoming more and more difficult to observe China and actually get a true sense of what's happening on the ground. In the latest official data, we saw some weakness, but very much anticipated. So in fixed asset investment, obviously we know housing slowdown is still present. We know industrial production, although there's a lot of government-related spending and local government bond issuance going to that, but the impact of that may have a lagged effect between 6 to 12 months down the line. We also know the recent credit data. So banks are not lending, not because they don't want to lend, but because there's not enough demand for credit. So that's why we need to look at other data. So we are continually looking for new data, particularly high-frequency data. Recent examples including copper-related commodity-side data, which is showing us maybe there are marginal pickup in demand. But 1 month of data does not make a trend. So we're obviously observing, especially heading into the very active Q3 before the National Day holidays, whether we can see new signs of maybe some vibrancy and activity in China.
But Jenny, so how much do you worry, for example, about this home inventory glut? Because it seems, there was a rescue plan, right? China came in, policymakers saying, look, there's a housing market rescue plan, but it doesn't seem to be going as well as expected.
Well, it's not going to be easy to observe the success of this plan because it's not driven by a central government, it's actually local government. So each city has its own plan in place. So imagine the multiplier effect of all of these cities with its own actions. And obviously the desired effect is to lift confidence. It's not to resolve the problem because actually China's transitioning away from the housing and property sector-led growth towards other fixed asset investments such as infrastructure, new energy, new economies. So this is what we're observing, and this is a transition that China necessarily has to go through in the coming decades.
But is there a danger that actually the transition, just doesn't happen the way it's meant to, or is it just delayed?
Well, this is the difficulty, I think, is the external environment. I think China has a plan in place. The difficulty, as we just saw in your previous story, is that geopolitical tensions around the world is making China's transition more difficult. Global trade will be impacted. Look at these trade corridors, particularly with the Middle East. That will have an impact and a delay on the desired effect of this consumption-led transition towards consumer-led growth.
Jenny, there's a lot of questions, of course, about China possibly seeing its first year of the outflow from equities in 2024. Is this a concern per se, or is it symptomatic of some of will policymakers step in and really try and stem that outflow?
Policymakers have made it very clear in recent policy speeches in the third plenum. Also, we had Governor Pan talking just last week. The effort is about continued gradual transition, stable growth, and the two key words are incremental, so not a big bang approach, but also the implementation of existing policies. So whilst all this transition is going on, I guess the policymakers are just asking for patience. And as investors, of course, we're just impatient, especially with so much volatility happening in the global markets. But for China heading into 2025, there will be a very steady reaction. There will be no panic button being pressed because at the moment data is not bad enough to push any of those patterns. So what I would say to investors is really to look across asset class. China will continue to be an anchor for stable growth going forward, but probably the transition means that growth will come down on an aggregate perspective, but from sector's perspective, there are still plenty of opportunities, especially if we factor in that RMB-denominated assets are becoming more and more of a safe haven asset for the global markets.
So, Ginny, when you look at consumption, are there any bright spots where you see even consumption actually, picking up relatively okay?
Yeah, if you look at summer months, domestic tourism in China is still booming. I would say the activity data is showing us that domestic and also increasingly regional tourism has been actually very positive. So I think there's still plenty to come, but obviously people rather save than spend for now.
Ginny, thank you so much for the terrific roundup on China. Ginny Yang, Chief China Economist at ICBC Standard Bank. Now, coming up later, warnings over safety at a Russian-occupied nuclear plant in southern Ukraine after a drone strike. This as Kyiv continues its incursion into Kursk. We'll bring you the latest, and this is Bloomberg.
This is Bloomberg News Now.
News when you want it at the touch of a button.
Another volatile day on Wall Street. We're seeing big moves.
All eyes on Capitol Hill as Democrats and Republicans prepare.
Today's job numbers casting doubt on the Fed's next move. Inflation remains front and center. And that's news when you want it with Bloomberg News Now. Get it 24/7 on the Bloomberg Business app, Bloomberg.com, and anywhere you get your podcasts.
Bloomberg News Now. Context changes everything.
Bloomberg Surveillance covers the latest in global markets and the political events that influence your world. Join Jonathan Farrell, Lisa Abramowitz, and Anne-Marie Hordern only on Bloomberg. Context changes everything. From our studios in New York and San Francisco, our expert hosts have the data and analysis about the companies you know and the startups to watch, plus the interviews you don't want to miss. Watch Caroline Hyde and Ed Ludlow on Bloomberg Technology, the only daily business show dedicated to tech, right in the middle of the trading action, every weekday, only on Bloomberg Television. Context changes everything.
The International Atomic Energy Agency says safety at a Russian-occupied nuclear power plant in southern Ukraine is deteriorating. That's after a drone strike on Saturday exploded about 100 meters from the plant's only remaining power supply line. Now, for more on all of this, let's bring in Bloomberg's Tony Halpin. Tony, thank you for joining us. How big a blow is it to Ukraine's war efforts?
Well, this is Europe's largest nuclear power plant, so anything that goes on there that risks security is of deep concern, clearly, to the International Atomic Energy Agency. And its director has said that he's extremely concerned by what's going on and is urging all sides to show maximum restraint. This power plant has been very much on the front line of tensions between Ukraine and Russia ever since the early days of the invasion. Russia occupies it, but it's very close to the front lines. And Ukraine clearly wants to regain control eventually of that plant. It says that's the only way to ensure security. So the incident has been concerning to monitors at the station, and they're sounding the alarm that this needs to stop.
Yeah, and Tony, at the same time, I mean, there has been, of course, we're, I think, in week 2 of this Ukraine incursion into Russia, and there were many questions about why now, what's the end game, and we have learned a little bit more about it in the last couple of days.
Yes, Ukraine's President Zelensky said that the aim of this incursion is to establish a buffer zone, as he put it, inside Russia to protect Ukrainian people living inside the border in northern Ukraine. Clearly, the implication of that is that Ukrainian forces intend to stay to safeguard this buffer, and that's a challenge for Russian troops who are trying to push them back. There have been reports this morning of a series of bridges over a key river in that area being destroyed, and that's going to make it very hard for Russia to keep its troops resupplied as Ukraine tries to push on.
Tony, thank you so much. Tony Halpin there with the very latest on Russia and Ukraine. Now, a German newspaper is reporting that the government will no longer grant new requests for aid to Ukraine. That's as Berlin seeks to rein in spending. Let's get more from Bloomberg's Oliver Crook in Berlin. Ollie, good morning. So how big of a blow is this to Ukraine's war efforts and defense companies in Europe?
Yeah, Francine, so listen, you're seeing the sell-off across the defense sector here in Europe today as a consequence, we understand, from this reporting, basically, which is what it's come down to is that the Germans don't have the money to spend on everything. And one of the things that they have had in their budget negotiations is to not give any more money to Ukraine. So we had the Defense Ministry, Boris Pistorius, requesting an additional 4 billion euros to go to Ukraine going into the future. You have Christian Lindner at the Finance Ministry saying, no way, we cannot do this anymore. We are not going to give any new money to Ukraine. And this is obviously very significant for a number of reasons, Francine, not least of which because Germany is the single biggest contributor in Europe to Ukraine, second biggest in the world after the United States. But it also sends a rather strong signal to not only allies of Germany, but also to adversaries, say in Moscow, if they're sort of unwilling to go further and give additional money to Ukraine. And remember, Francine, this has all of its sort of roots back in that sort of constitutional court ruling last year where the Germans just don't have the money that they thought that they had. The question is, where does it leave Ukraine? You still could have some sort of funding coming from at the EU level. However, even that, you know, a lot of these economies, whether it's France and Italy, are sort of strapped for cash, so maybe don't have the flexibility to do what they'd like to do. But again, when we think about the impact on the markets there, you can see the sort of downturn on a number of the stocks there. This does not affect Germany's own military spending, which is actually a different fund, 100 billion euros that they established off budget in order to build out their own military. So maybe a little bit of a positive sort of tailwind to some of the negative headlines for the defense sector this morning.
So, Ollie, the German economy is also struggling. The budget, of course, is a problem. How will the government manage in other parts of the economy?
Yeah, so the big problem that they have here, Francine, is that you have three governments, three parties in government, and all have very different ideas on how to solve a lot of Germany's economic problems. The good news right now is that they seem to have a sort of draft budget agreed across the three major players. Of course, the socialists and Scholz, they're really going to emphasize welfare spending and the welfare state. The Greens want to use a lot of this money for the energy transition, and then, you know, the FDP want less regulation. They want really less spending. So that's the sort of good news. The bad news is that their priorities are still fairly wide apart. They haven't actually got the final agreement on this budget. There's still a 12 billion euro hole in there. So it'll be interesting to see, because this now is going to be debated within the Bundestag in terms of where this sort of conversation starts going. I think what's interesting is when you take it back to Ukraine in the political context within Germany right now, the questions that are being asked by a lot of people on the far right and the far left is, if we have all of these major economic problems at home in Germany and Germans are suffering, why are we sending so much money to Ukraine? Why are we taking in, you know, they took more than 1 million refugees from Ukraine? And that's a political discussion that's really coming into sharper relief, Francine, over the next couple of weekends, because you have state elections across the east of Germany where you have a lot more of these radical parties that are going to do quite well.
Meanwhile, Ollie, the mystery around Nord Stream 2 still has not gone away, now causing some tensions between Germany and Poland.
Yeah, Francine, I mean, it's almost 2 years ago now. It was September 26, 2022, when that Nord Stream pipeline, we sort of woke up, it had blown up. There were a huge amount of questions about who did what, and, you know, there's still a lot of mystery that's sort of shrouding it. What has become interesting for the Germans now is that they have finally put out an arrest warrant on a sort of Ukrainian national that had been living in Poland. And so obviously that raises a lot of questions, and it raised a number of questions by the former head of the German sort of intelligence agency, saying that basically there's no way, he said, that the Ukrainians were not sort of behind it and authorized at the top level, but so too the Polish. Now we have had a sort of warm, cool denial from the Polish, but then you had Tusk come out on Twitter. This I thought very interesting over yesterday, saying basically that all the initiators and the patrons of the Nord Stream 1 and 2, the only thing you should do today is apologize and keep quiet. So not really a full-throated denial that Poland had any knowledge of this. This, of course, doesn't mean that they did, but it's interesting that he's taking a sort of more combative tack, particularly on something that is so sensitive, obviously just off of the shore of Germany, blowing up that pipeline 2 years ago.
Ollie, thanks so much for the great context. Oliver Crook there with the very latest on Ukraine and Germany. Coming up, back in demand. Well, here in the UK, real estate agents see a pickup in property inquiries after the Bank of England cut rates earlier this month. We'll discuss that next, and this is Bloomberg.
This is Bloomberg Daybreak Europe. I'm Tom Mackenzie in London. These are the stories that set your agenda.
Taking you from the U.S. market's close to the overnight session in Asia. We'll walk you through what you need to know to kickstart the European trading day. Live from our European headquarters, we bring you the day's top market-moving stories, unmatched expert analysis, and on-the-ground reporting from across the continent. Tune in every weekday at 6 a.m. London time, only on Bloomberg Television.
Middle East and Africa, vibrant resources and high-yield investment opportunities abound. Join me on Horizons Middle East and Africa for the stories, newsmakers, and insight from this exciting region. Now weekdays, only on Bloomberg.
The countdown is on. Everything you need to get the edge at the end of the market day.
Big tech earnings kick off later this afternoon.
Gilead is coming out right now.
We have take two numbers. Back to the markets, right? Our bread and butter.
NVIDIA is one of the best stories in the tech space.
That actually matters a whole lot more.
It might shock some of your viewers.
You're watching The Close.
Get ahead of tomorrow's trading with The Close. Weekdays on Bloomberg. Context changes everything. It's a multi-trillion-dollar industry. We'll show you what's happening in ETFs like no one else. Bloomberg ETF IQ, Monday on Bloomberg. This week, Balance of Power is live in Chicago for the Democratic National Convention.
So we've got a race here, and the sprint begins.
We'll bring you breaking developments.
Vice President Kamala Harris closing the gap with Donald Trump.
And informative analysis, all leading up to special coverage Thursday evening, including Vice President Harris's acceptance speech as the Democratic nominee for president.
As president, I will show Donald Trump what real leadership looks like.
Tune in all week on Bloomberg Television.
Welcome Welcome back, everyone. Let's talk about the UK's national obsession, property prices. Prospective property buyers in the UK appear to be wasting no time as they look to take advantage of the Bank of England's first interest rate cut since the pandemic. Now, a survey by Rightmove today highlighted more potential buyers had contacted estate agents since the recent rate cut. Let's bring in Tom Metcalf, our EMEA Finance Managing Editor. Tom, I don't know, I mean, this is kind of exciting, right, if the property market is doing okay, but there's nothing tangible at the moment. It's people kind of calling up and saying, I'm interested in moving or I'm interested in buying.
Yeah, exactly, and that's why these portals are quite fascinating, because they do almost offer like a leading indicator in terms of what we might expect, you know, when the property market really starts going after the summer lull. And what they're saying is they've seen in August a 19% jump basically in prospective buyers, which would bode well for the housing market in terms of if you want those house prices to keep on rising. And that's, you know, it's all basically driven by the Bank of England's rate cut back in August or earlier this month. And so it's a sign that, you know, that is a bit of a momentum shift. We might well see, you know, kind of a bit more of a return to animal spirits in that space after a couple of moribund years.
And so do we know anything about asking prices? Is there any more kind of, if this is positive news, where does it also come from?
Yeah, asking prices ticking up. Again, as you say, it's sort of asking prices rather than for sale. But yeah, no, it's really very much sentiment driven. And the interesting thing here is normally in August you're seeing sort of a complete lull. So the fact that people are out there looking at things suggests that, you know, as September, October come around, that there will be, you know, might be quite a lot of activity.
I mean, it's pretty incredible that it's that quick, right? I mean, I guess the interest rates have gone up by so much, and so people worry. And as soon as that cuts, there's like animal spirits back.
Exactly, and I think that's probably, to your point, like, you know, it's very early days, but it is just a sign that everyone's really kind of keyed into this, and maybe they were just looking for that momentum shifter. And of course, the other thing to think about is, you know, there is an expectation that Bank of England will cut again. So, you know, perhaps a lot of this is sort of kind of looking forward and more hopeful than sort of anything too solid.
Yeah, and maybe a lot of people didn't move for a long time because of that interest rate increase,
absolutely.
Right? Tom, as always, thank you so much. Tom Metcalf there for breaking it all down for us. Up next, Bloomberg Brief, Danny Berger and Manus Cranny in New York, and this is Bloomberg.
What prompted you to want to get out of just doing surgery to be an administrator and a hospital leader?
Watching others who did it well. I had a dean who recruited me from Birmingham, Alabama to Minneapolis, Minnesota, which is a big jump to convince me to move my family. I realized over time that my training as a surgeon brought a set of credible things to the table. One, if surgeons have a measure of emotional intelligence, not much of our training reinforces that. It reinforces skill, not necessarily emotional intelligence. But if a surgeon has some self-awareness and emotional intelligence, what they bring to the table of leadership are three fundamental things. Number one, they do everything in teams. Their operations, their patients they see is all team focused. Number two, they value process, but they hold themselves very much accountable to execution. They understand that it's good to explore a patient, but what really matters is that you take the tumor out. And then number three, they make difficult decisions on incomplete information. Those things I realized that I could bring to the table as a leader if I had a sort of a passion for working with people and had some sense of self-awareness.
From the beating heart of global finance, economics and politics, and wherever newsmakers are moving markets, Bloomberg brings you conversations that allow for deep discussions and important insights. What do you think the future is for inflation? Is this a new normal? Are markets too optimistic? How do you worry about the things that are outside your control? How does the current fighting completely stop? I'm Francine Lacqua, and this is The Pulse, every weekday only on Bloomberg.
Good morning. This is Bloomberg Surveillance.
Welcome back to the opening trade.
This is Bloomberg Technology.
This is the Asia trade.
You're watching the close.
Welcome to Balance of Power.
This is Bloomberg. Bloomberg loves earnings.
I know it's like your Super Bowl, right?
I can't wait. It's like opening presents in the morning.
All right, it will be exciting.
Nobody covers earnings like Bloomberg.
Good morning from our global headquarters in New York. I'm Manus Cranny alongside Danny Berger. Welcome to Bloomberg Brief. Let's set your agenda.
Countdown to Jackson Hole. Chair Powell and global central bankers set the stage to set policy tone. And it's a critical week for U.S. politics. Harris gears up for the DNC. Trump hits the swing state trail. And it's a decisive moment for peace talks. Secretary Blinken touches down in Israel for another attempt to clinch a deal. Good morning, Manus.
Danny, good morning. Good to have you back side by side. So it's a pivotal week for politics of the Middle East, politics of the United States of America, but it's got a little bit of a mini wobble. Yen is up by 1%. So much for a lump into the carry trade. Stocks are prevaricating at the moment. It's a mini deja vu of August the 5th, but there is no buyer's remorse. You put on 7 sessions and 7%, almost 7% on the S&P 500. So you had your best week of 2024, and $5.5 billion flew in there. NVIDIA is a little bit lower this morning, a little bit lighter on its feet. What is the quality of the intonation that you'll get from Jay Powell? We'll talk about that in a moment. The quality of the potential cut that could be signaled. Mike Wilson says it's the U.S. jobs reports that will define, the next jobs report will define the trajectory for stocks. Bond markets down by 5 basis points last week. Mary Daly in the FT talking about more confidence that inflation is under control. You've got a little bit of light T-bill issuance and $20 billion worth of, $75 billion worth of 20-year paper. But it is the yen. It's the rally in the yen, which is the dollar down by 1%. And I go back to this narrative. The hedge funds have turned bullish for the first time since 2021. You may get the tone and the intonation of a cut from Powell. But, Danny, what is the quality of that tone? Will it be a hawkish, one-and-done tone? That's the nuance that we're going to focus on this week.
Manus, I think the frightening thing for a lot of people coming into this week might be exactly what you're showing, that the yen is strengthening. And it's mild, but we are risk off this morning. The fact that you have the yen strengthening, you have Japanese stocks down nearly 2%, and you have U.S. stocks unable to catch a bid. It's that fear of positioning coming back into this market. The CTFC data just showed that hedge funds have turned bullish on the yen for the first time since 2021. So you get this feeling of, is this happening all over again? Are we really vulnerable at this point that you can have a repeat of 2 weeks ago? And what is a big week for both politics and central banks?
Look, you had a VAR shock. If we go back to August the 5th, you had a VAR shock and you had this cathartic sort of rush out of equities and rush out of risk. What you can say is the VIX is back to normalcy, but the FX market, the FX volatility is still extended and it is still high. That's what Standard Chartered are basically saying. And I think it goes back to this. Look, Powell may intimate that we're on the roadway to a cutting cycle, but is it going to be a hawkish cut that you get? Not like the Kiwis gave last week of we thought about 50 basis points.
Well, that's why I thought Daly was really important. You mentioned it, saying that they're more confident about inflation, but also within that manner, she says that the path there needs to be more patient, that it needs to be gradual. That is not a woman that sounds like she's ready to cut 50 basis points. So she says she is ready, but gradual is the word she used.
And indeed, our guest this morning is Jane Foley. We'll dig into this in just a moment. She sort of says the retail sales is something that takes some of the heat out of the 50 basis point narrative as well.
Yeah, as did Goldman Sachs, downgrading their recession expectations from 25 to 20%. Well, speaking of which, Jane Foley writing this morning, that focus will be on the Jackson Hole event. This will be in the context of firmer retail sales activity, which argues in favor of a 25 basis point rate cut rather than a 50 basis point move from the Fed next month. And Jane, head of FX strategy at Rabobank, does join us this morning. Jane, I wonder what you make of an expectation that potentially at Jackson Hole, 25 basis points will be on the menu, not 50. Yet this morning, what you're seeing in FX markets is a yen that's strengthening by more than 1% versus the dollar.
Well, of course, part of this is not related to the Fed. It's all related to the Bank of Japan. And I think most people in the market now, compared with 2 weeks ago, are now perhaps more satisfied that 25 basis points is what's more likely for September. But for Japan, it's still, the price activity this morning still suggests that there's an awful lot of activity out there. Now, one thing that I think is very interesting with respect to the Bank of Japan is, the market got it wrong on July the 31st. The market consensus thought that the Bank of Japan would wait before hiking interest rates for the better economic data. They didn't. The Bank of Japan went and hiked on July the 31st, but since then, we've had the better economic data. So we've had real wages turning positive for the first time, I think, 27 months. We've had last week the GDP data showing a rebound coming in stronger than expected. So in a way, you could say that UAIDA's more hawkish stance has found vindication in that data. And I think now what we need to know is, well, does that give indication for UAIDA to carry on being hawkish? And of course, he on Friday will be hauled in front of a parliamentary committee, and that's what the market is waiting to see. What will his tone be?
So, Jane, good morning to you. Good to have you with us. I like your phrase. He's going to be hauled in front of Parliament. And here is the thing. If he shows any backtracking, any sort of step back from his hawkish position, his credibility is going to be seriously lampooned. So threading that needle on Thursday ahead of Jackson Hole, it's going to be pivotal for yen, isn't it? Maybe that's part of the reason why the hedge funds have relocked and reloaded into their net long position.
I think that's exactly right. He's got his credibility on the line, so we can't actually go back and say, oh, I was wrong. Maybe I shouldn't have hiked interest rates. He perhaps has to come out and say, well, look, the economic data, they have improved. They are improving. We can hike interest rates again. That said, I still think that there's no need for him to signal that they'll be hiking interest rates soon. I mean, there is perhaps some speculation that could they go again in October. I think it is more likely that if they go again this year, it will be right at the tail end of the year in December. And we've got to remember there's a political angle in Japan too. We've had the Prime Minister stepping back from the leadership of the LDP, and that means that there is the possibility that the new leader could call a general election before the end of the year, which again complicates the outlook perhaps for the timing of the next Bank of Japan policy move. So quite complex, I think, right now in Japan.
So if the dollar side of the equation is known, the uncertainties with the yen side, Jane, when it comes to the dollar, if 25 is already largely expected by this market, is it the DNC and political developments and any stopping of the Harris momentum that's more important for the greenback this week?
I certainly think that, because we've got to wait really right to the end of the week till Friday before we hear, Powell commenting, and ECB's lane won't be until Saturday. I think it is going to be the Democratic Convention that's really going to steal a lot of the limelight for most of the week. And certainly, if we look at the polls, if we look at Harris's solid performance really in the last few weeks, the market has got to be thinking, were we hasty in putting on that Trump trade, back in June or in July? And the market has to rethink that. So if the market is less inclined to be putting on Trump trades, well, that could soften the dollar as well. And perhaps I think this has been one reason why euro-dollar is back above 110.
And on that euro-dollar, it's traded that range, you say, between 106 and 110. But you look at the data in Europe, you look at the data in Germany last week, and it certainly was hardly enthusiastic. So again, is it fundamentally a weaker euro? Will the ECB outcut? Then you got to project forward. Will the ECB be forced into outcutting the Fed?
Well, I think one of the big stories, which has been under the shadows really for most of this year, has been the resilience of the euro. It is one of the better performing G10 currencies in the year today, after sterling, after the US dollar. But it's very quietly been very, very resilient, despite the fact that Germany's economic performance has been poor, despite the fact that we've got, the move to the far right, French politics, budget issues in France and elsewhere in Europe. None of that has really bothered the euro all that much. And so if we anticipate that the euro's resilience is going to carry on, yes, there is a focus on the ECB, but perhaps not a lot else. If we expect that resilience is going to carry on, I still think that most of the outlook for euro dollar is going to be driven by what people think is going to happen to the dollar, and less so by the ECB story.
I mean, it's pretty remarkable. Bank of America pointing out this morning that investors in Europe have just flipped short the dollar. So exactly capturing that sentiment change that you're talking about, Jane. But what happens if it is a Trump presidency? I understand what that means. Well, few people understand exactly what that means for the dollar, but presumably tariffs also mean a weaker Europe. So in the context of politics, how certain is a stronger and more stable euro?
Well, again, the US politics come into it. So if we were to have tariffs, now we could assume that they could, if we were to have a Trump presidency, and then if we were to have the tariffs, we could assume that they would be done, fairly quickly. He doesn't need Congress to do that, or he wouldn't need Congress to do that. And so that would perhaps suggest that the Fed's easing cycle would be cut short, perhaps in the middle of next year, something like that. Then the Europeans are going to be thinking about Chinese goods potentially being dumped in Europe that were potentially intended for the US market, so prices coming down. So exactly as you just described, a weaker euro, a stronger dollar. But, that was very much the market's thinking, after that disastrous TV debate between Biden and Trump back in June. And now the market's beginning to think, maybe that's not going to happen. Maybe Harris has got a better chance. And I think this is what's being wound into the euro-dollar trade right now, this second thinking of what the market thought was going to happen in terms of US politics.
Jane, thank you very much for being with us this morning. Let's hope Powell doesn't deliver a Bernanke-style taper tantrum at Jackson Hole. That is your risk away to Thursday, and Powell into the weekend. Jane, thank you very much. Other stories trending on your Bloomberg terminal this Monday morning? What have we got for you? Well, the operator of the convenience store chain Circle K has made a proposal to take over the owner of 7-Eleven chain, 7 & I Holdings. Couche-Tard's bid would be the biggest foreign takeover of a Japanese company if the deal goes through. The merger would create the world's top operator of roughly 100,000 convenience stores.
And Chinese copper exports dropped in July from an all-time high. Local demand conditions are improving. Exports fell 40% from June. That's nearly double last year's level.
And the Ukrainian President Volodymyr Zelensky says the army's incursion into the Kursk region is an effort to degrade Moscow's ability to launch attacks on Kyiv. He says it establishes a buffer zone with the Russian territory.
And coming up on the program, we're going to talk more about politics, about the DNC. The Democrats head to Chicago in the race for the White House.
And later this hour, we'll examine the policies on the tickets so far with Isaac Boltanski, Director of Policy Research over at BTIG. Context matters every day on Bloomberg.
From our studios in New York and San Francisco, our expert hosts have the data and analysis about the companies you know and the startups to watch, plus the interviews you don't want to miss. Watch Caroline Hyde and Ed Ludlow on Bloomberg Technology, the only daily business show dedicated to tech, right in the middle of the trading action, every weekday, only on Bloomberg Television. Context changes everything.
always on the heartbeat of the tech sector.
Spread across global markets.
The real-time data aspect is going to be important.
We're going to bring you expert analysis on that. Sure.
Don't miss Bloomberg's interview with the
Get your fixed income fix. Watch Bloomberg Real Yield every Friday right here on Bloomberg. Context changes everything. The countdown is on. Everything you need to get the edge at the end of the market day.
Big tech earnings kick off later this afternoon.
Gilead is coming out right now.
We have take two numbers. Back to the markets, right? Our bread and butter.
NVIDIA is one of the best stories in the tech space.
That actually matters a whole lot more.
It might shock some of your viewers.
You're watching The Close.
Get ahead of tomorrow's trading with The Close. Weekdays on Bloomberg. Context changes everything.
We know our country is going to be as strong as our willingness to fight for it and to fight for what we stand for. You know, when you know what you stand for, you know what to fight for.
That was the Vice President Kamala Harris speaking in Pennsylvania yesterday as she gears up for a big week ahead. Meantime, the former president, Donald Trump, has been counseled by his campaign to avoid personal attacks and focus on policy. At a rally this weekend in Pennsylvania, Trump continued to attack Harris.
Have you heard her laugh? That is the laugh of a crazy person. That is the laugh of a crazy. It's the laugh of a lunatic.
So we're about 80 days away from the U.S. elections, but it looks like Harris has the slight edge over Trump. Joining us now is Vonnie Quinn. She's in Washington for the week, hunkering down for the DNC. Vonnie, good to see you. So what is the objective? What's got to be achieved this week at the DNC? It's got a lot of pomp, a lot of theater, but what does it cut through to?
Yeah, kicking off with the first keynote speech Monday night, President Joe Biden will give that, and then building, as you say, all the way through Thursday when Kamala Harris formally accepts the nomination. The Democrats will want to rally the base. They'll also want to build on this momentum that we've been seeing in order for Kamala Harris to have a successful campaign for the next 10 weeks. As you say, a very short campaign. She didn't go through the primary process, right? So this is the first time that many Americans are seeing her on the big stage, on the national stage. Sure, she's been vice president, but we haven't had the kind of vetting that you might typically have during a primary process. That's going to be a goal. Also fundraising. There are going to be a lot of events taking place in Chicago around the DNC in order for the Harris campaign to be able to continue to spend. It's already spending at a frantic rate between Labor Day and the election, $370 million worth of ads already booked.
America's going to get a split screen, Vonnie. They'll have, of course, the DNC that you've been speaking of, but also Trump on the campaign trail. He goes to the border first and then swing states. What does he need to do to cut through the message? His team has been telling him, focus on the economics, focus on policy. He hasn't exactly been doing that.
Well, that in itself is suggestive of the idea that the Republican Party is not unified, Danny, right? It's an amazing sight to have a candidate tell his supporters what his aides are telling him and basically complaining about that. Trump will be going through these swing states. That was not on his agenda. It is now. So Michigan, North Carolina, two very important states. Kamala Harris is actually leading in North Carolina right now. Directionally, I mean, statistically, it's perhaps not significant at the moment. And we're very early days, of course, polling-wise. Then on Thursday, he will be in that border state of Arizona. As you say, he will be hammering the immigration point. She's perceived to be very weak on immigration. She has answered the question. She has said she'll bring back that failed bipartisan immigration bill, but she may need to say more about immigration. Arizona, of course, being also a state where abortion rights are going to be on the ballot now. We know that. Signatures have been collected, and that will be a key issue for Arizonans as well. Right now, according to the latest New York Times Siena poll, she's actually 5 percentage points ahead in Arizona, but she will need to say more on immigration.
Vonnie, we appreciate it. Bloomberg's Vonnie Quinn in D.C. Okay, now over to Middle East politics. The U.S. Secretary of State Antony Blinken is in Tel Aviv. He's pushing for ceasefire between Israel and Hamas. He spoke after meeting with Israeli President Yitzhak Herzog.
This is a decisive moment, probably the best, maybe the last opportunity to get the hostages home, to get a ceasefire, and to put everyone on a better path to enduring peace and security.
For more on the ceasefire efforts, we're joined by Lisa Odenheimer, Bloomberg Israel breaking news editor. Lisa, what are still the sticking points that needs to be solved in this negotiation?
Right. So, as we remember, the whole thing started on October 7th when Hamas invaded Israel and took 250 hostages back to Gaza and killed 1,200 people. So what's at stake now is the return of the hostages in exchange for prisoners, for Palestinian prisoners who are being held for terrorist attacks and so on. The main sticking points, of course, are the two important corridors in Gaza. One is a corridor, a road between Gaza and Egypt, where Israel says much of the weapons that Hamas has used against Israel were brought in from in tunnels dug underneath the border. And the other corridor that's another sticking point is a corridor that separates North and South Gaza. Hamas wants the people who have been displaced from the north to be able to go back freely to the north, and Israel wants to be able to check those people and see if they're actually militants or if they're innocent civilians.
Well, yesterday evening we had Hamas releasing their statement accusing Netanyahu of thwarting the efforts of the mediators. Blinken is talking about this as a last opportunity. This is a decisive moment. It may be the last opportunity to get the hostages home. You know, after the Hamas statement, do you get the sense that we're moving further apart from a deal or the potential for a rapprochement?
Oh, it's so hard to tell. I mean, after the meeting in Doha last week, Israel said that they're cautiously optimistic. However, after that, Israeli Prime Minister Benjamin Netanyahu said that Hamas is being obstinate, and Hamas has said that Israel is adding new requests to the ceasefire agreement. So it's very hard to tell. But of course, U.S. Secretary of State Antony Blinken is here right now, and he's pushing very hard for an agreement. So with any luck, yes, it will go through.
Okay, Alisa, thank you very much for joining us this morning. That is Alisa Odenheimer on the very latest Blinken's push for ceasefire in the Middle East. Coming up, a look at the other major headlines from around the world across the papers. Good morning from New York.
This will probably go down in history as one of, if not the largest financial crime ever.
I cannot imagine a scenario where $8 billion just disappears.
Bankman-Fried has pled not guilty to multiple fraud charges.
Sam was just too important in the crypto community.
When someone says, I'm going to give $1 billion in the next 2 years, like that catches everybody's attention.
As time went on, their ideas got like weirder and weirder.
I don't think he even had almost a conception at some points that it was wrong or right. I think he just had the mentality that he has to win.
This committee will not stop until we uncover the full truth behind the collapse of FTX.
Sue, Mark.
Are you in? I'm in.
I'm in.
We're in.
Will
this be the last of its kind? No, this is the nature of capitalism. Get over it.
DOJ or other authorities
Could face bigger challenges next.
that was going to keep reading World Cup. This is a 3
as the economic picture
covering the intersections of Hollywood, Silicon Valley, and beyond.
Good morning, this is Bloomberg Daybreak Europe. I'm Tom McKenzie in London. These are the stories that set your agenda.
Taking you from the U.S. market's close to the overnight session in Asia. We'll walk you through what you need to know to kickstart the European trading day. Live from our European headquarters, we bring you the day's top market-moving stories, unmatched expert analysis, and on-the-ground reporting from across the continent. Tune in every weekday at 6 a.m. London time, only on Bloomberg Television.
It's your Bloomberg Brief on this Monday morning. Danny Berger and Manish Cranny in New York. Okay, let's get you some front page news. Here's a look at what's making headlines around the world. Manish, this was on the New York Times. George Santos, he's the disgraced former Republican congressman from New York. He is expected to plead guilty today to federal charges. Doing so allows him to avoid nearly 24 charges. Those include wire fraud, money laundering, and stealing public funds.
It's going to be an interesting day on that one. The journal leads with China. China's becoming a money pit for foreign automakers. In July, the share of EVs shipped to dealers by non-Chinese brands slipped by 33%, down from 50% 2 years ago. The Chinese consumer embracing their homegrown brands, BYD. I mean, that's been the bane of Elon Musk's life in terms of having to cut prices and really try and hold on to his market share.
Yeah, and we just learned from GM last week, too, that their JV is at stake, and they're really struggling to sell their EVs. Now, sticking with China, the FT has this look at airlines, specifically Western Airlines, and them traveling to China. They've been slashing their flights. It's kind of this perfect cocktail of bad things for them. For one, you have just lower demand from China. And then the second thing is that you have the issue of Russian airspace. Yeah. Essentially, Western airlines can't fly through Russian airspace where Chinese flights can. It drastically changes your travel time, the amount of fuel you need. It takes something like 9 hours if you can travel through Russia, if you're coming from London. It takes 12 hours and 48 minutes if you have to avoid Russia going from London to Beijing.
Round that up with a tailwind and call it 13 hours.
Exactly. It's a long time.
I mean, there's also another facet as well. If you just look at who's cancelled what, I mean, BA, but Australia, Qantas has actually cancelled their direct route into the mainland. You look at tourism there in China, it's down 56% from its 2019 levels. People simply are not traveling in the numbers, and they're not spending the same amount of money. So I think there's both the commercial and the business aspect in terms of inbound and outbound travel. But of course, all the Chinese are going to.
I was going to say, the numbers are probably great for Japan.
Probably great for
Japan. All you need to do is look at the luxury earnings. All of them said within China, our figures are weak, but Chinese travelers in Japan are really strong. So all of them have these really strong numbers. So I don't know, if you're an airline in China, that Japan-China trip is probably the one to keep on.
Keep the dream alive for the luxury brands. We'll take you through the political trail next.
What prompted you to want to get out of just doing surgery to be an administrator and a hospital leader?
Watching others who did it well. I had a dean who recruited me from Birmingham, Alabama to Minneapolis, Minnesota, which is a big jump to convince me to move my family. I realized over time that my training as a surgeon brought a set of credible things to the table. One, if surgeons have a measure of emotional intelligence, not much of our training reinforces that. It reinforces skill, not necessarily emotional intelligence. But if a surgeon has some self-awareness and emotional intelligence, what they bring to the table of leadership are three fundamental things. Number one, they do everything in teams. Their operations, their patients they see is all team focused. Number two, they value process, but they hold themselves very much accountable to execution. They understand that it's good to explore a patient, but what really matters is that you take the tumor out. And then number three, they make difficult decisions on incomplete information. Those things I realized that I could bring to the table as a leader if I had a sort of a passion for working with people and had some sense of self-awareness.
Earnings.
I know it's like your Super Bowl, right?
I can't wait. It's like opening presents in the morning.
All right, it will be exciting.
Nobody covers earnings like Bloomberg.
From our global headquarters in New York, welcome to Bloomberg Brief. I'm Danny Berger, alongside Manus Cranny. Let's set your agenda.
Countdown to Jackson Hole. Chair Powell and global central bankers take the stage to set policy tone. A critical week for U.S. politics. Harris gears up for the DNC as Trump hits the swing state trail. And a decisive moment for peace talks. Secretary Blinken touches down in Israel for another attempt to clinch a deal. Danny, good morning. Good to be reunited. It's like a mini deja vu of August the 5th. The yen is bid.
I would say very many, because look at this. U.S. equity is unchanged. So it's hard to kind of say we're seeing the big turmoil you saw of August 5th. Even so, we are on track for the best 7-day streak of gains for equities since October 2022. And we're just 2% away from all-time highs. That is a remarkable turnaround from what we've seen just over the past 2 weeks. Yes, there are nerves in this market. Your 10-year yield is lower by nearly 2 basis points, 3.86%. But again, the magnitude of moves in this market is quite remarkable. The 2-year yield, that is below 4%, or just around 4% rather, was at 4.5% in July. All of that comes to a head with Jackson Hole. And this is potentially the thing for markets to worry about, because it's not just Jackson Hole. It is UATA speaking on August the 23rd. And ahead of that, we have this repositioning happening. Yet again, it is a stronger yen versus the dollar by 1%. And it's potentially worrying, man, is that you have this mix of stronger yen and equities in Japan down nearly 2%. They closed down 1.7%. So it's not a repeat of August 5th, but as you say, it has echoes of it. Do we need to worry about positioning again that you can get a stronger yen and risk off elsewhere?
I think it just shows you how febrile it is. From Thursday, Friday, when we talked about relock, reload on the carry trade. In other words, people were furiously reselling the yen. They were buying higher yielding assets. Here we are Monday morning. We're talking about a yen that's bid by over 1.65% at one junction. Not just that bad at the moment, but this is about positioning. The hedge funds have pivoted from, I mean, typical schizophrenia. They've capitulated and they've gone net long for the first time since 2021. So the momentum behind yen is very, very clear. Ahead of, as Jane Foley said, UATA being hauled in front of Parliament. And if he sticks to his hawkish tone, maybe that's what reinvigorates that yen bid.
Well, just taking a step back, it's this pendulum that keeps swinging, right? Pendulum being in Japan and the BOJ policy, and here in the U.S. It is remarkable to look at all the sell-side funds that came out after the weak jobs number and said, we think a recession is more likely. We think there's going to be something like 50 basis points. And for people to not exactly walk that back, but soften it over the past week when we've had strong data, Goldman Sachs now only sees a 20% chance of a recession. They had seen 25 and says it will go to 15 if the next jobs number is strong. And Bank of America out with a note over the weekend also saying it is 25 basis points that is likely, and we're unlikely to get 50 at all for the rest of the year.
It's going to be the quality of the tone. It's going to be about the tone and the intonation from Jay Powell at Jackson Hole. He's got to thread that needle, and whether he threads it with a intonation of a cut But if it's a hawkish intonation, it's about the quality of the possible cut that you're going to get. And it could well be one and done. And Goldman Sachs fiddling around over 5% narrative of whether it's a recession at 25%, 20%, just shows you how difficult it is. What does it take to get them to 15%?
And the chop in the markets that can happen in the meantime.
Exactly.
As Manna says, we are awaiting Jerome Powell's remarks from Jackson Hole on Friday and whether or not he'll give the go-ahead for a September rate cut. Ven Ram from our MLive team joins us now. Ven, just looking at the recent Fed talk we've gotten, Mary Daly saying to the FT, gradualism is not weak, it's not slow, it's not behind, it's just prudent. Is this a Fed that's ready to signal something more than 25 basis points worth of cuts?
No, I don't think that the Fed is going to do that, Danny, by a big margin, because, I think that the markets are overpricing how dovish the Fed is going to be. Now, what is going on with the Fed and the U.S. economy? The U.S. economy is cooling, losing momentum for sure, and in the disinflationary narrative is progressing well as well. So what does the Fed want to do here? They want to take rates to less restrictive levels. They do not want to accommodate the economy just yet, because the economy is doing just fine. So they are going to measure, on Friday, Powell is going to signal that the Fed is ready to lower interest rates. But he's not going to throw caution to the winds and say, we are going to cut rates by 50 basis points or anything wild like that. I think that the markets are completely mispriced. They are expecting 100 basis points of rate cuts by the end of the year. It's not going to happen. They're barking up the wrong tree.
They're barking up the wrong tree. Goldman Sachs are struggling to decide. I mean, they've come back to a 20% possibility of a recession from 25%. They raised it to 25% at the start of August. They're now back at 20%. And they say it's the jobs report. Mike Wilson says it's the jobs report that will define the trajectory for equities. It's such a high wire act. Is it the jobs report that will define whether we're at 50 or 25? Has it come down to that kind of binary piece? It's such a big piece of economic information.
Well, I don't think that the Fed is going to overreact to any one data point, Manas, because I think that, what we have learned about the labor market is that it's doing fine. The jobless rate is ticking higher, north of 4%. So it is time for the Fed to start cutting rates and take it to less restrictive territory. But I don't think, even if the jobs report is sinister enough, I don't think that the Fed is going to overdo that, overread into that report and deliver 50 basis points.
The Fed doesn't overread the way the markets overexert themselves sometimes when it goes for like an intermeeting cut. Ben, let's see what the week holds. A lot of rhetoric and a lot of politics to play for. Ben Ram from the MLive team. Speaking of politics here in the U.S., the Democratic National Convention kicks off in Chicago today. Over the weekend, the Vice President Kamala Harris spoke in Pennsylvania.
We know our country is going to be as strong as our willingness to fight for it and to fight for what we stand for. When you know what you stand for, you know what to fight for.
Meantime, the former president, Donald Trump, has been counseled by his campaign to avoid the personal attacks, focus on policy. At a rally this weekend, also in Pennsylvania, Trump continued to attack Harris.
Have you heard her laugh? That is the laugh of a crazy person. That is the laugh of a crazy. It's the laugh of a lunatic.
We're 80 days out from the U.S. elections, and for now, based on the polls, it looks like Harris has a slight edge over Trump. Joining us now is Isaac Boltanski, Director of Policy Research over at BTIG. Isaac, thank you so much for being with us. It's going to be a week of high drama in Chicago. When you look at these polls, it's interesting. Harris leads Trump 49 to 45. That's on the ABC Ipsos poll. On the CBS YouGov poll, 51 to 48. So she has this euphoria behind her, but to convince the undecided voter, what is the policy narrative that will bring them to her?
Yeah, look, I think two things can be true at the same time. First and foremost, this race has been fundamentally reset, and that's clear in the numbers, and the Harris surge here, I think, has been meaningful. The second part of this, Manis, and I think it's important, is Donald Trump is still leading on the key issues that animate voters in the swing states, right? He still leads on the economy, inflation, and immigration. And those have generally been the three issues that tend to animate, excite, and define the voters' enthusiasm in the 6 to 7 states that will decide this election. So those two things are true at the same time, and that's why we're going to have such a close race. I think for me, what I'm going to be watching this week in Chicago is how much does the Harris campaign try to focus the election on other issues where she is the clear leader, things like healthcare, like abortion, like the senior services issues. Those are all areas where she has clear leads. And I think that's why you're going to hear a whole lot about the care economy over the next 4 days in Chicago.
Well, the last we heard from Harris was about the economy, was about the issue that she lags on, giving policy pronouncements on both housing and price gouging. The Washington Post, in response to this, Isaac, had a very scathing editorial out saying that instead of delivering a substantial plan, Harris squandered the moment on populist gimmicks. Did she, as the Post say, squander the moment, Isaac?
Oh, look, I think that the Harris campaign is purposely at this point keeping some of these policy positions vague. I think that is the goal. That is a feature, not a bug. And I think that's for a number of reasons. First and foremost is Democrats disagree on a whole lot of things. What they agree on is they don't like Donald Trump. And for as long as they can keep that focus on Trump, the better for them and the more that it's going to influence turnout and enthusiasm and all those good things for them. I think that's one of the reasons that you're not seeing as much of a break from Bidenomics and why you're not seeing as much new specificity around those areas. Really, the Harris campaign, I think, is treating the Biden predecessor here a little bit like a buffet where you can pick and choose the good parts of the policies without having to respond to some of the bad parts, right? Where we've seen this very clearly. Let's just talk about housing, for example. I mean, it's great. It would be great if they were able to build 3 million new units like they talk about. But instead, the only thing they can really do administratively is push for more down payment assistance. And I think we all know economically, throwing more money at the problem isn't the answer when it's a supply crisis. And so all of these things play well and they're good buzzwords, and I think you'll see them positively mentioned on Twitter, but they're not things that I think substantively have shown that they work.
Well, either both candidates are deliberately or knowingly ignoring the fiscal side of the equation and just hoping that the bond market gives them the latitude, or else they're just darn, underprepared. How does she counter his weight or his leaning in the swing states on the economy and on inflation? Biden struggled to convince anybody he had delivered the 9% to 3% change in inflation. You say she needs to show more willingness to work with corporate America to take on that lead head to head. Can you just expand on that? What does that look like? What does she need to bring on side on the campaign from corporate America to shift the narrative?
I think one area here, Manus, where you can see some movement from her is going to be regarding the FTC and even possibly the SEC. I know that alphabet soup sometimes can be frustrating to keep a track of, but they're very, very important. And so I'd be interested to see if you do see some sort of softening in her tone, possibly from surrogates regarding M&A and consolidation in certain markets, while she still keeps hammering home markets where she has concern. Obviously, food markets are the primary focus here, but saying that perhaps she can soften up in other areas of the economy. And again, I think that is the tight line that she's going to have to try to tightrope, that she's going to have to try to walk. That's going to be difficult, right? Because you are running in some ways on the Biden campaign, the Biden White House's record, which has not been one that's friendly to consolidation. So it's a tightrope, and one that I think ultimately is going to lead to them staying at 30,000 feet on a lot of these policy issues.
And you see the unknownness with companies. 319 companies so far in their earnings have mentioned politics, that according to Alpha Sites, double the number from 4 years ago. Isaac, we really appreciate your time this morning. We'll have to catch up after the DNC. Isaac Boltansky of BTIG. Okay, coming up on the show, U.S. Secretary of State Anthony Blinken has arrived in Tel Aviv. He is pushing for an Israel-Hamas ceasefire. We're going to have more on the state of truth talks next on Bloomberg Brief.
From the beating heart of global finance, economics, and politics, and wherever newsmakers are moving markets, Bloomberg brings you conversations that allow for deep discussions and important insights. What do you think the future is for inflation? Is this a new normal? Are markets too optimistic? How do you worry about the things that are outside your control? How does the current fighting completely stop? I'm Francine Lacroix, and this is The Pulse, every weekday only on Bloomberg.
The top names in global leadership are on Bloomberg.
We are 40 million. We're a big country, and we really depend on the aid from the world. And we depend on the aid and the position and the stance of the US. So I would like to understand, what would it mean to finish war fast? If Trump knows how to end this war, he should tell us today. Because if there are risks to Ukraine's independence, if there are risks that we will lose the statehood, we want to be prepared for this. We want to understand whether in November we will have the powerful support of the US or we'll be all alone. Only our lives are at stake here, and nobody can just trade our lives.
Nobody covers the top global leaders like Bloomberg Television and Radio. It's the world's second largest economy with a growing influence in global affairs. But geopolitical uncertainties, deflationary pressures, and questions about foreign investment linger. Bloomberg, the China Show, brings you the unmatched expertise you need to keep track of breaking news, in-depth market analysis, and the most influential newsmakers in and around China. Bloomberg, the China Show. Weekdays around the world, right here on Bloomberg. Context changes everything.
This is a decisive moment, probably the best, maybe the last opportunity to get the hostages home, to get a ceasefire, and to put everyone on a better path to enduring peace and security.
U.S. Secretary of State Anthony Blinken speaking earlier in Tel Aviv. Ceasefire talks do continue between Israel and Hamas, but they are currently stalling. Here to join us is Bloomberg's Bobby Ghosh. Bobby, I just want to get your thoughts on what you make of that language that we heard from the Secretary of State. Probably the best, maybe the last opportunity.
The last opportunity, that's the phrase that really jumped out at me. I understand why he's saying it. This is his 9th or 10th trip to the region. He's trying to get both parties to focus and move forward. But at the same time, when you say this is the last opportunity, you're putting yourself in a box. The United States is basically saying it's kind of now or never. So if he comes home empty-handed, which all the reporting around the trip so far suggests that he might do, both sides are sticking to their guns, they're not moving forward, then what do you next? What do you do next? Once you've already said this is the last chance, where do you go from there?
Well, the statement from Hamas, which came after these discussions yesterday, was pretty classic, which is Netanyahu is thwarting the efforts of the mediators, Netanyahu is placing obstacles, reaching an agreement. Now, there's a certain amount of backing for Netanyahu, both in terms of kit deployed to the region, etc. This administration, you say, has not publicly said that it is Netanyahu that is the obstacle. Does this administration need to pivot? Is that what you expect to happen? If we're in the last chance saloon for a ceasefire, what have they got left? What's left in their arsenal to push Netanyahu and Hamas together?
But this administration has been playing this very careful sort of game for a while now, whereas on the one hand, it has been supplying Israel with the weapons it wants. It has, in public, been backing Israel and blaming Hamas for the failure of the talks so far. In private, when briefing journalists in Washington, the same administration has been blaming Netanyahu. In private, they say it's Netanyahu's fault mainly. He keeps making these unreasonable demands. By the way, there are echoes of that in Israel. There's plenty of reporting in Israel that supports the view. The big question is, will the Biden administration dare to break out of that routine and in public openly finger Netanyahu for this? I'm skeptical that it will, especially the politics surrounding it this week with the Democratic National Convention in Chicago. I don't see the administration openly blaming Netanyahu, but as I said earlier, where do you go from here?
Well, at the same time, you have Iranian spokesperson coming out this morning and saying, us retaliating is our right, and it has nothing to do with the ceasefire talks. I mean, what does it mean to have this still in the background, this unknowingness of what happens when Iran does finally retaliate?
Well, it's Iran reminding everyone that they have their own agenda, they have their own timetable. Again, the Biden administration has been suggesting that if there was some movement towards a ceasefire, Iran might hold off. How the Biden administration feels that it is authorized to speak on behalf of Iran, I don't know. But this is Iran saying, we have our own, we speak for ourselves.
Yeah, but it does buy a small window as well in terms of we were building up every day last week in terms of understanding the retaliatory force, and this is a small step back from that all-out, but that doesn't speak for the proxies. Bobby, thank you very much. Bobby Goshta on the very latest from the Middle East. Let's turn to the earnings slate Monday morning. New set of reports. Estee Lauder will hit before the bell. The cosmetics giant is one of the many companies that has been hurt by soft demand in China. Joining us now for a quick setup on this is our Bloomberg European consumer goods reporter, Dasha Afanasieva. Dasha, good to have you with us. Estee Lauder, we've seen lots of Western companies under pressure in China. Just how much pressure did they have? How much is the headwind for them in China? Good morning.
Good morning. Well, Estee Lauder's got this, and for me, it's also a corporate governance issue because the Estee has the majority of 86% of the voting power. The same chief executive and chairman, who's a member of the Lauder family, have been in their roles since 2009. And meanwhile, in the last 2 years, Estee Lauder's lost 65% of its market value. So if I was an investor today, I'd be looking for some sort of good news on a recovery after 6 of the last 8 quarters showed negative growth.
Dasha, it is really remarkable because you've had luxury companies fight some of these headwinds, do well in Japan, for example, do well with ultra high net worth individuals still shopping. Does the fact that there is some concern about Estee Lauder show that they're kind of losing this battle to remain in the upper echelon and capture this kind of consumer?
I think it's a constant battle. Every time you buy a brand, you have to keep investing in it to keep it relevant. Otherwise, it just kind of fades away. You know, the likes of MAC, that's on the top of color cosmetics anymore. That's an Estee Lauder product. And at the same time, you've got these headwinds in the US, weaker US consumer, weaker Chinese consumer. So to counter that, it's a constant effort. And they've only just in the last few quarters since the November turnaround plan been kind of in emergency mode. Let's turn things around. Let's come back to boosting profits, reducing inventories, and it's really an uphill struggle.
Okay, Dasha, we appreciate it. We'll see what today brings. Bloomberg's Dasha Afanasieva. Okay, let's get a quick check on your markets this morning. It is about the strengthening in the yen, but in the meantime, the dollar is weaker. There you go. There's not the yen. Your euro.
You couldn't make it up.
Yeah. Well, I mean, at least we see the euro. To Jane Foley's point, you know, euro is remaining strong and resilient in this context of a weaker dollar, of a stronger yen, despite the fact that European growth isn't doing that well.
It breaks 110. I think she said it'd been so well behaved between 106 and 110. There's your dollar yen for you. That's the yen strengthening by over 1%. The hedge funds have gone net long for the first time since 2021. But that euro is actually breaking above 110 for the first time. We both looked at this just the end of 2023, and the dollar's on the back foot.
Yeah, and perhaps alarming in that context of a stronger yen is that you do have risk off. Just a faint echo of what we had.
Teeny tiny.
Just teeny little
teeny
echo.
Tiny. Okay. What will Ueda say when he is hauled in front of Parliament on Thursday? That's ahead of Jackson Hole. We're going to send you up for your week ahead. She's back. It's good to have her here side by side. Context matters every day on Bloomberg.
Welcome to the world of decentralized finance.
With a surge in Bitcoin, you have crypto stocks also surging.
Bloomberg's covering all things crypto, the people,
This is a political attack, and we must hold our elected officials accountable.
the transactions,
Really a record-breaking moment.
Bitcoin is the exit strategy.
and the technology.
Awareness is going to grow, and these things grow the overall industry.
Crypto as an asset class is here to stay.
Bloomberg Crypto, only on Bloomberg. It's a multi-trillion-dollar industry. We'll show you what's happening in ETFs like no one else. Bloomberg ETF IQ, Monday on Bloomberg.
Good morning. This is Bloomberg Surveillance.
Welcome back to the opening trade.
This is Bloomberg Technology.
This is the Asia trade.
You're watching the close. Welcome to Balance of Power.
This is Bloomberg. From our studios in New York and San Francisco, our expert hosts have the data and analysis about the companies you know and the startups to watch, plus the interviews you don't want to miss. Watch Caroline Hyde and Ed Ludlow on Bloomberg Technology, the only daily business show dedicated to tech, right in the middle of the trading action, every weekday, only on Bloomberg Television. Context changes everything.
It's your Bloomberg Brief, Danny Berger and Manish Krani in New York. Okay, let's get you set up for a busy week. Politics kicks off today with the DNC. Then Vice President Harris will be delivering her acceptance speech on Thursday. We also get Fed minutes. Those come out on Wednesday. ECB accounts on Thursday. And then we're going to round out the week with Fed Chair Jerome Powell speaking on Friday at Jackson Hole. And we'll also hear from Ueda testifying in front of Parliament on August 23rd, Manis.
Yeah, like what Jane Foley said, he's going to be hauled in front of that Parliament. Does he stick to that hawkish tone that he delivered after the Bank of Japan raised the rates? Bond markets are going to be front and center for us, Danny, as we say, counting down to Jackson Hole. You've got a drop of 5 basis points last week. You got those Fed minutes, as you just pointed out. So you're just seeing a little bit of a drop in yield in the very first instance this morning.
I mean, the move in the front end of the curve has been extremely remarkable. 4.5% is where we were in July. It goes back down to 4%. Does it have more room to go, Manis? Potentially not. Potentially the direction of travel is higher yields, given that we're still pricing in 30% odds of a 50 basis point hike. I go back to what Mary Daly said to the FT. Gradualism is not weak, it's not slow, it's not behind, it's just prudent. And then goes on to say, well, the labor market is slowing, it's not weak. You probably need a weak labor market in a Fed that isn't arguing for gradualism to get something like 50 basis points.
Well, she talks about having more confidence, and then this lines up the ducks for what Powell will actually say when we get to Jackson Hole in terms of the intonation that you are possibly going for a cut. But the question is then, how hawkish is that cut? And that's the difficult part. Then you look at other things like Goldman Sachs, who are prevaricating between a 25% possibility of a recession here to 20%. But what does it take to get to 15%?
I mean, it's remarkable to come off a week of really strong economic data, and we're still debating cuts. Cuts
Indeed.
are still on the table. That is very clear. Okay, that's it for your brief surveillance. That's up ahead on Bloomberg.
good morning. This is Bloomberg Surveillance.
Welcome back to the opening trade.
This is Bloomberg Technology.
This is the Asia Trade.
You're watching the close. Welcome to Balance of Power.
This is Bloomberg.
We've got a good situation here. Things are indeed getting better.
You're still seeing that some of that U.S. exceptionalism is still there. While we look at the earnings data that is in front of us, that looks to be quite positive, as we look ahead at the second part of the year, we're not quite as optimistic.
I wouldn't mind if things just kind of simmer down a little bit. And I think they will.
You've got all these disconnects that I think markets have to reconcile themselves with.
This is Bloomberg Surveillance with Jonathan Farrell, Lisa Abramowitz, and Anne-Marie Hordern.
Live from New York City, let's get your week started. For our audience worldwide, good morning, good morning. This is Bloomberg Surveillance alongside Lisa Abramowitz together with Anne-Marie Hordern. I'm Jonathan Farrell, coming off the back of the biggest weekly gain of the year so far on the S&P 500, leaving behind the growth scare of just 2 weeks ago and taking some comfort from better retail sales, softer inflation, contained jobless claims. The week ahead, well, let's get to the week ahead in just a moment. Let's start with equity futures on the S&P 500. We're doing okay, totally unchanged, coming off the back of a 7-day winning streak. On the Nasdaq 100, just a little bit softer. We're down 0.1%, and the small caps going absolutely nowhere. Lisa, the week ahead absolutely stacked. But let's talk about the main event. It's Friday, Jackson Hole, Wyoming. You'll be there. Chairman Powell addressing the nation, addressing the world.
At 10 a.m. And the key question for him is, can he be dovish enough, given the fact that this market is set up for basically the soft landing nirvana that we saw earlier this year? Essentially, the economy is doing fine and the Fed will still cut rates by potentially 100 basis points by year end. Can Jay Powell come out, confirm that, and give justification without a significant weakening in the economy?
Hard landing to soft landing. You wonder whether we can flip back again. Let's hit the calendar. September 6th is payrolls. September 11th is CPI. September 18th is that Fed decision. Can this story change all over again in the next month or so?
It could change in the next 2 days, John. This is basically the story we've been living is, narrative table tennis or ping pong has been absolutely on fire over the past couple of weeks. Whipsaw central, just this feeling that anything could change, given the fact, just this is a good example, Goldman Sachs' Jan Hatzius just a couple weeks ago came out and said, we're actually increasing our recession forecast to 20 to 25% because we're very concerned about what we just saw in the payrolls print. Now they downgraded the recession forecast over the weekend, basically saying, just kidding, we saw those retail sales and we're right back almost to where we were before.
Back and forth over the last 18 months or so. It's been one narrative to the next. The DNC was supposed to be Anne-Marie, and she's with us around the table with a report on air traffic control in the New York area. What is your report on air traffic control?
Well, all flights are grounded until this morning, and it's very hard and difficult to get on a flight that's going to leave the New York area today, Jonathan.
They'll have some things to say about airlines and price caps and price gouging and those kind of things. Do you want to talk about that? Have we actually got the policy yet? Do we know what the policy actually is?
Well, it's very thin on details, but there's been a huge amount of pushback from economists. Look at Ken Rogoff over the weekend saying there was some mixed ideas in here. This one was certainly a bad one, and they should abort this. What we heard from Kamala Harris on Friday, Jonathan, when it comes to price gouging was the fact that she said she wants to basically encourage Congress to expand the FTC ban on price gouging when it comes to grocers. It's illegal in most states, so they're talking about now just making this federal. This has got a tremendous amount of pushback because it is thin on the details. And many people said, well, this sounds like price controls. Washington Post editorial board says, this sounds like a gimmick. You've seen a lot of people push back and say, no, she's for free markets. This is not what they want to do. The issue, of course, Lisa, it's politics. It polls well.
Well, this is the reason why I find this incredibly frustrating. And I'm going to be on a, absolute broken record at this point. But it's frustrating because you don't know what to take seriously and what to take as some sort of bid to get voters. And so at what point, this is the same thing that we see with Donald Trump and we see with Kamala Harris. At what point do you take them seriously, but not literally, right? Is this sort of a signal, whistling to certain groups rather than actually coming through with policy? We don't know the answer, and I think that that's one key question.
You'll love this headline from The Atlantic, economically dumb, politically smart. Isn't that the kind of thing that drives you insane? Economically dumb, politically smart. Before we even criticize the policy, critique the policy, go through what the policy might even look like, we need to talk about whether there's even a problem. If you look at grocery retail margins, they range from anywhere between 1% to 3%. If you look at food inflation in a CPI report from last week, what were we running at? 1% year over year? Is this even a problem that needs addressing? Isn't this the war of 2 years ago?
Especially at a time where you have Kroger set to slash their costs for consumers by some $1 billion with the Albertsons tie-up. Look, you are correct. This raises a question of whether this is economically sound or whether it matters, and at what point this means that we're actually going to hear real tangible policy, or whether it's all going to be just like messaging in a way that doesn't give people a concrete sense of what the actual platform is. That, I think, is one of the key questions from people who actually care about policy.
Well, it was just a few months ago when this White House was welcoming those cuts we talked about at Walmart, at Target, at Amazon, when they were slashing prices, saying, finally, corporations are listening to us. But this goes back to a report the FTC put out in March, that they said some companies were basically using the pandemic era to inflate prices higher than they thought was acceptable. So they're leaning into that frustration because you know why? Kamala Harris is the incumbent right now on this ticket. And if the #1 issue across voters is the economy, notably inflation, she needs someone else to blame besides Biden-Harris.
If we had a more focused Trump campaign, what we would have repeatedly day after day, and he did mention this briefly over the weekend, if these are things you could have done, why didn't you do them? You've been there for the last 3.5 years. I think on this program, we've described the Democratic ticket repeatedly over the last month or so. If it were a stock, it would be facing a relief rally. Just because we've seen the back of the other guys. The CEO, no one wanted there at the top of the company. New CEO comes in. We're sitting here waiting for the policies and the vision of the new CEO. We've got this honeymoon period. The CEO comes out and does a news conference and kind of mentions a little thing here and there. The analysts come out and say, what on earth is this about? Then they back away from it again. And we still don't really have a policy platform going into the DNC. Now, this is a double-edged sword because both the beauty and the beast of the Harris ticket is it can be anything you want it to be. And that's been the beauty of it over the last month or so. It's going to become more and more of a problem over the next couple of months.
When? And this is the key question. When is it going to be a problem? Is it going to be the debates with Donald Trump? Is he going to be able to hold her feet to the fire? Exactly to your point. Is it going to be pushback within the own party in terms of the DNC when it comes to protests? Is it going to be actually when people ask and have Kamala Harris sit down with a television newscaster and have an interview?
Actual questions.
Actual questions. At what point? Because right now, as you pointed out, Donald Trump's camp isn't doing it. In fact, he's actually facing pushback from the sort of MAGA camp saying that you're not extreme enough to the right. So, you know, at what point is she going to get a free pass just because the pressure isn't there from the other side?
We'll keep navigating, or at least attempting to navigate, the mess in front of us over the next couple of months or so. Your scores look like this. Welcome to the program. Equity futures on the S&P just about positive, coming off the back of a 7-day winning streak on the S&P 500. In the bond market, pulling back a single basis point on a 10-year. Your yield on a 10-year maturity this morning, 387.11. That's the market backdrop, Bramo. The week is not just about Jackson Hole. We've also got some earnings on Wednesday as well. Absolutely stacked.
Yeah, Target earnings coming out on Wednesday. We also have Biden, of course, speaking at the DNC today. It's supposed to be sort of the first in his goodbye speeches. Kamala Harris will be speaking on Thursday. And, of course, Powell speaking on Friday at the theme. And I want to just note this. The theme is reassessing the effectiveness and transmission of monetary policy. I want to hear what they have to say about how effective it has been at bringing down inflation. There's one other event that sort of seems like a side note, sort of akin to auctions, but that I actually think is very important. And that's going to be what we see with preliminary revisions to payrolls on Wednesday, when the BLS, the Bureau of Labor Statistics, goes back and actually will downgrade how many jobs was added to the economy. That's the expectation. Does this raise questions about just the resilience of the U.S. economy?
That data you all traded on over the last couple of years might look a little different. It's kind of odd, isn't it?
Completely.
Yeah, we'll get into that a little bit later. That's the lineup for the week ahead. Here's the lineup for the next 60 minutes or so. We'll catch up with Laurie Calvasina of RBC with stocks close to all-time highs. Neela Richardson of ADP looking ahead to Jackson Hole. And Steve Englander of Standard Chartered with the dollar on a 4-week losing streak. We begin with our top story. The S&P 500 coming off its best week of the year as we await Fed Chair Jay Powell's remarks at Jackson Hole later this week. Laurie Calvasina of RBC writing this: we're on guard for choppy conditions to persist for a while longer. And don't rule out a growth scare if economic data releases continue to disappoint. For now, our 5,700 year-end price target still stands. Laurie's with us in a room around a table. Laurie, good morning to you.
Good morning.
Proceed cautiously is some of the advice you're giving people at the moment. Why is that?
So look, I would say we put an equal emphasis on the proceed and the caution, right? And, we do think that it's, we've had sort of the worst behind us, right? We think we saw the lows on August 5th. But, I was looking at the retail sales data last week, right? And it's kind of chopped around the last, couple of reports, right? And so we're coming off a good one, right, where it's relieved some angst. I am cognizant as someone who's been on the sell side for more than 2 decades. We're going to come back after Labor Day, and we're going to be just absolutely deluged with sell side conferences, right? We're going to be hearing all kinds of stuff from companies. And so I think it's going to give investors another chance to sort of dig into what happened this summer, what's going on with the consumer. Even if we kind of put the consumer aside, one thing we keep reading from companies who work with other corporations is that all of the uncertainty from whether it's interest rates, the election, geopolitics has been weighing on business decisions. We heard this from actually one of the industrial companies last week. And so I think we're kind of going into this period, right, where we're pretty fully valued. Some of my models say we could go to 5,800, but my valuation model says kind of 56-ish, 5,600-ish is about fair value if you get 3 or 4 Fed cuts this year. So we've got, pretty fair full valuations, and we could be going into a period, right, where we're hanging on to every little economic data point again.
We're doing that already. I think the big difficulty we're having, particularly over the last year or so, the contradictions between what we hear from the companies and what we see in the economic data. Yeah. I'm sure the team were talking about this with regards to retail sales just last week. Retail sales, the data looks pretty decent. What we hear from the companies, very different story. So you've got to make a decision on the sales side. How much weight do you put on one versus, say, the other? Do you put more weight on the data or what you're hearing from the companies?
So I would say on data, I tend to put more weight on hard data as opposed to survey data. I think some of the survey-based data, like the ISM reports, for example, do a better job of spooking investors, especially on the manufacturing side. But I'll tell you, John, I do read through a lot of company transcripts, and we pay a lot of attention to what they're saying about consumers in particular. And I do think that what we've seen, this reporting season, maybe the tail end of the last reporting season, is yes, there's been a step up in concern about the consumer. Consumers are clearly reacting in a more profound way to the cumulative impact of inflation. So prices are still high, even though the pace is decelerating a bit, and also of interest rate uncertainty. But at the same time, we saw one company write last week saying we're not seeing further fraying happening, right? So it's kind of a very balanced, nuanced discussion where I think companies are saying, yes, we're seeing an impact, but we're not alarmed in that we think consumers are really breaking down in a profound way.
That company was Walmart, and that company reported incredible earnings, and that company talked about the potential for sales to increase and margins to increase, which is something that we have seen pretty consistently across the board. Margins are increasing. Does that speak of layoffs to you in the future?
So we've looked at what companies are saying regarding cost consciousness of their own, restructuring, layoffs in particular. We're not finding much. In general, the layoff conversation, I think it peaked in 2021, and it's been coming down pretty markedly. Overall, what we're seeing is companies are really still focused on things like automation, software tools, kind of this technological revolution. All these tools that have come out since, kind of the 2016 period, they allow companies to attack things other than labor first when they need to defend their margins, to defend their earnings. And they still seem to be, somehow getting water out of this rock. I don't know if it's going to last indefinitely, but I've been thinking this for like 3 years, that we're going to suddenly have a reporting season where this doesn't work anymore. And they seem to really just be good at getting it done. Smaller firms, not as much. I think that's been one of the problems with Russell 2000 is their earnings and their margins just can't keep up because, in fact, they don't have the same kind of scale. They don't have all the same kind of tools.
I love the idea of water from a rock, and it sort of indicates this sort of biblical back and forth that people are talking about. How much is the rally continued to be hinged on what happens with Jay Powell on Friday, whether he comes out and gives a nod to all of these expectations for some sort of rate-cutting cycle that can match what the market is expecting?
So look, I at least in my conversations, right, and I deal more with equity clients. I deal with a lot of long-only clients for the most part, so I can't speak so much for kind of the fixed and hedge fund side of the world. But in my mind, I've even had, if I think back a couple months ago, some investors were saying we don't think we need cuts this year because the economy is so strong. And I certainly haven't been hearing a lot about 50 basis points. I do think people want the Fed to cut. I don't necessarily know in my world that 50 is demanded, but there's certainly some corners of the market that want that. So could there be some potential disappointment if you don't come away with messaging supporting that? Of course. I would view that as more kind of short-term dislocations, noise, as opposed to anything fundamental. I think in my world, people want the cuts to get started, and that's about it.
Let's pick a sector, financials. You're starting to like the financials. Do the financials demand a 50 basis point cut? Do they need one?
I think financials, you know, would like enough cuts to keep the economic expansion going. I think that financials would probably not handle it all that well if we have so many cuts that we start to spook people about the health of the economy. I mean, the financials trade very closely if you look at relative performance with consumer confidence. And they also really have become, I mean, it's kind of a boring sector, frankly, but it's really just sort of the plumbing of the economy, right? Like it's just sort of the guts of things. So I think they'll react to that as much as cuts, but I think financials would do well with a cut, you know, some cuts before the end of the year. I think they want to get started in September, but I don't know that you need the sort of panicked cuts.
It certainly feels like we're in a calmer state of things, Lisa, after the data we got last week. I don't know if you saw the interview with the San Francisco Fed President Mary Daly in the Financial Times. There was a key phrase in that. The economy is not in an urgent place. A much calmer state after the data of last week going into Jackson Hole, and maybe that benefits the financials.
She was arguing about gradualism, not being weak, but being prudent at a time where the economy is certainly not falling off a cliff. Now, I'm wondering, as I was reading that interview, does this actually support what the market is really hoping for and seeing? Because it seems like we're back to the future. We're back to where we were in January, where the economy isn't falling off a cliff, but because inflation's coming down, because of all these other types of factors that we heard from Austin Goolsbee over the weekend as well, the Fed can still cut aggressively. If they don't come through with this, then we go to their theme. The transmission mechanism, is it failing on both sides, right? I mean, how much are they actually going to effectuate anything other than a massive rally in risk assets one way or another, or decline in risk assets as they decide to move their policy?
Do you think these are the right kind of rate cuts? Are these the right kind of rate cuts that you're anticipating?
I think so. I mean, I think at this point, inflation has come down. I mean, we're not to the 2% target yet, but, you know, to be honest, a lot of my conversations, people don't think that's realistic anymore. So, you know, I think that you have seen the Fed start to talk about both sides of the mandate. The inflation genie, I would say, has not been completely slayed. We do know if we look back at history, it is tough, right, to get inflation back in the bottle once it comes out. And I think the Fed pays some heed to that. But at the same time, we're hearing a lot of chatter about the employment side of things. I think they want to stick the landing. I do take them at their word when they say they're data dependent. And so as much as we would all like to have these crystal balls that we can see out for the next 6 to 9 months, that may just be something that's not realistic in this scenario. We may have to let them be, you know, data dependent meeting to meeting.
Laurie Cavacina of RBC. Laurie, you're going to be sticking with us. Equities right now on the S&P 500, just about unchanged. Let's take the opportunity, just a little bit of time to get you an update on news elsewhere with your Bloomberg Brief. Here's Danny Berger. Hey, Danny.
Hey, John. Circle K operator Kaush Todd is looking to take over 7-Eleven owner 7 & I Holdings. It would be the biggest foreign takeover of a Japanese company. Together, it would create the world's top operator of about 100,000 convenience store. 7 & I says that the bid is preliminary and non-binding, and terms have not yet been disclosed. Donald Trump is battling Kamala Harris for momentum this week. He is planning an aggressive schedule as the DNC kicks off in Chicago. He's going to hold rallies in 4 swing states and visit the U.S.-Mexico border on Thursday. That's ahead of Harris's acceptance speech at the DNC. He'll also sit down for a series of interviews. His aides say that it's specifically an intentional effort to try to goad Harris into an unscripted interview herself. A Washington Post and ABC News poll released Sunday shows that Trump lags Harris by 4 points. Israel and Hamas leaders are blaming each other for a stalled ceasefire and hostage deal. Israeli Prime Minister Benjamin Netanyahu accused Hamas of completely obstinate, while Hamas said Netanyahu is fully responsible. U.S. Secretary of State Anthony Blinken is now in Israel, now meeting with top leaders. Earlier today, he said that this is a decisive moment and maybe the last opportunity. The U.S. said talks on a Gaza ceasefire are in the final stages. And that's your Bloomberg Brief. John.
Danny, thanks for that. Appreciate it. The President's National Security Advisor, Amos Hochstein, coming up a little bit later on the program. A few hours from now, Amos Hochstein joining us a little bit later. Don't miss that conversation. Up next on the program, the Harris economic pitch.
When I was Attorney General, I went after price-fixing schemes. And when I am president, I will continue that work to bring down prices.
80 days from now, we are going to defeat a communist known as Kamala Harris.
That conversation up next, live from New York City this morning. Good morning.
Bloomberg covers the world with unmatched reach and resources. From more than 120 countries, the moment news breaks, 24 hours a day. Bloomberg, context changes everything. The countdown is on. Everything you need to get the edge at the end of the market day.
Big tech earnings kick off later this afternoon.
Gilead is coming out right now.
We have take two numbers. Back to the markets, right? Our bread and butter.
NVIDIA is one of the best stories in the tech space.
That actually matters a whole lot more.
It might shock some of your viewers.
You're watching The Close.
Get ahead of tomorrow's trading with The Close. Weekdays on Bloomberg. Context changes everything.
Live from New York City, welcome to the program. Your scores look like this on the S&P 500, just about positive this morning to unchanged on the S&P 500 in the last 20 minutes or so. Under surveillance this morning, the Harris economic pitch.
When I was Attorney General, I went after price-fixing schemes. And when I am president, I will continue that work to bring down prices. I will take on big corporations that engage in illegal price gouging.
80 days from now, we are going to defeat a communist known as Kamala Harris. She's a communist. Most radical left person ever to run for office. This is not what this country needs.
So here's the latest. Kamala Harris riding a wave of momentum as the DNC gets underway in Chicago. The vice president holding a 4-point advantage over Donald Trump in the latest polling from the Washington Post and ABC News. Harris set to address the DNC on Thursday following comments from VP pick Tim Walz on Wednesday and Anne-Marie President Biden later on tonight.
Tonight's going to be the passing of the torch. President Biden is going to come in. There's going to be a lot of love for him in the room for the fact that he basically, if the Democrats, how they view it, saved the country from Donald Trump, and now he was able to pass the torch to the next generation. It was literally Sunday, 4 weeks ago, when he dropped out. And when you look at the polls over the weekend, this is an absolute change in this election. The way Kamala Harris is able to narrow the gap between her and the former president, actually, she's leading when you look at the head-to-head matchups.
Lori Cavacina of RBC still with us. Lori, is there anything to analyze here?
From my seat, not so much. I mean, we put a piece out this morning in our weekly, and we just commented on there being some headline risk, right, for things like healthcare and consumer staples. It's not a lot I can analyze at this point in time. I mean, we have at least something, and that is positive, right, because I've spent, honestly, the last year talking with non-U.S. investors about this election and having literally nothing to analyze from the Biden administration. So at least I have something to talk about at this point in time. I have, a sense of sort of gut instincts, and so that is huge. As a forecaster, I have something to look at, but it's not a lot.
What's your gut instincts on price gouging? Pure rhetoric?
So, I read a lot of transcripts, right? And we've read a lot of consumer staples transcripts. I'm not so much thinking about this reporting season. I'm thinking most about the last reporting season. And it did seem to me like some of the consumer staple companies were a bit tone deaf, in terms of talking about passing price increases through at a time when they were also acknowledging low-end consumers in particular, kind of pushing back. And so I kind of understand it from that perspective of just the messaging that I've seen on some of these earnings calls. But at the same time, I don't think this is going to play well in economic circles.
You were one of the few 2 weeks ago when the markets were imploding that said part of this is the Trump trade unwinding.
Yeah.
Do you see the Trump trade coming back in? And also, what is the Kamala Harris trade?
So I don't know if we totally know what the Kamala Harris trade is yet at this point in time, but one of the things we said with the Trump trade, people were talking about financials and energy and the 2016 playbook, and we said, look, if we just look at how markets are trading in terms of what's really moving with Trump, and we looked at betting markets specifically, it was really just the S&P, right? It had a positive correlation, whether you looked at predicted or whether you looked at some of the betting market averages, and if you looked at U.S. relative to Europe, that was also pretty correlated with Trump. So we've been watching that in recent weeks, right? Because we've had the market rebounding, you've had Harris pulling ahead in the polls, you've had the betting market starting to shift as well. We did notice when we did our Friday updates that you had seen an uptick for Trump in the predicted market. I'm not sure if that held over the weekend. I haven't looked at it. But we looked at that and we were, sort of prepared to write, well, maybe this is starting to break down. We said, maybe this is sticking around. Maybe this is still somewhat aligned.
No one campaigning on getting tough on the nation's debt. You noticed that?
I don't think there's appetite. I mean, look, I'm in armchair political scientist mode here, but so forgive me. But
we're both in the same seat.
Yeah,
don't worry.
But when I get asked about this all the time in client meetings, and the thing I say is, look, if you look at sort of both sides, there doesn't seem to be any appetite for fiscal restraint. And I go back to kind of my Politics 101 class at UVA, where Larry Sabato reminded me that all politics are local. And, you know, we talked a lot about bringing home the bacon and that kind of thing. But at the end of the day, remember, Congress is trying to get money to their districts. And we saw, you know, some news headlines recently, right, about the IRA money and some of the tax credits and some of the Republican congressmen saying, please don't take these away. You know, I think that just sort of illustrates the point, right? Like, what's the incentive of the individual lawmakers to be fiscally responsible? I don't think you get there until there's some sort of big crisis looming.
I asked that question just for Bramo.
Thank you. I appreciate
Anytime.
that. Just want to point out that there's a $16 billion 20-year auction coming on
30
Wednesday.
year as well later this week.
So to me, I'm looking at this and thinking, is it going to matter? Are we making auctions great again? I just want to keep putting that out there because this is going to be the main question for a lot of people in terms of volatility hinging on this election.
Is it fair to say that both candidates are looking to make auctions great again?
Yeah, and actually, I have some studies that I've been reading about both of them, and, you know, we can go through some of that later.
Looking forward to it. We'll do that in just a moment. Laurie, it's good to see you. Thank you.
Thanks for having me.
Thank you very much. Laurie Cavacina of RBC. Coming up next on the programme, we'll catch up with Nita Richardson of ADP, head of Jackson Hole, a little bit later this week. From New York City, this is Bloomberg.
I've seen firsthand how some fashion businesses make women feel. And I think there's one thing, you know, being really vocal and being an Instagram activist and talking about something, there's a difference than putting your money where your mouth is and really trying to do something about the problem. And that's what I did with that business. It was about how do I take everything that I know and I've learned and actually do the opposite. And I think that as a young black female entrepreneur, the only thing that I could do was what I know from my experience. And the honest truth is, I didn't set out to create a company that was like deeply rooted in the principles of inclusivity and diversity. I set out to make a company that was right for me and my friends, and I knew that if I had a problem, chances are somebody else does. And I think that's where so many businesses are, you know, created, when you're solving a problem that's real for you and therefore real for the consumer.
Morning, this is Bloomberg Daybreak Europe. I'm Tom McKenzie in London. These are the stories that set your agenda.
Taking you from the U.S. market's close to the overnight session in Asia. We'll walk you through what you need to know to kickstart the European Trading Day. Live from our European headquarters, we bring you the day's top market-moving stories, unmatched expert analysis, and on-the-ground reporting from across the continent. Tune in every weekday at 6 a.m. London time, only on Bloomberg Television.
Seven-day winning streak on the S&P 500. Let's see if we can make it day 8. Equity futures right now on the S&P totally unchanged. Looking over the last 7 days or so, a rally of close to 7%, up by 6.8% over that period. The best run going back to something like 2022. Lisa, it's been quite a run and a very different story to how we started this month.
Can I just point out that when I went on vacation, the market went to, hell in a handbasket. When you went on vacation, it rallied the most of this year. Just want to point that out. I mean, there's no correlation necessarily.
What are we suggesting, that I should go on vacation more?
I don't know. I'm just pointing out that this is what happens. So people might call me gloomy and doomy, but last week I had returned from vacation and it happened to be like the biggest rally of the year.
Is that because you're happier when things are lower in the market? Is that what that's about?
I haven't worked through it, but I just wanted to point that out.
She's upset she missed that rough bond
That's
auction.
what this is about.
Yes.
Right, okay. You wanted to be here when markets were like cratering.
I'm not saying anything. I think it's important to really focus on the debt options.
AMH is aggressively nodding her head to that assessment. Let's turn to this bond market. Lisa can really get knee-deep into this, sort of up to her neck in it. On a 2-year right now. Incidentally, when I left 2 Fridays ago, the 2-year was just about 4.05%, and that's exactly where the 2-year is right now, at 4.05%. There was all this fear that we were going into this hard landing, really ignited by what we saw in the labour data to start the month of August. And Lisa, things have calmed down a heck of a lot since then, encouraged by what we saw in retail sales. And since then, over the last few weeks, jobless claims have just pulled back just a touch as well over the last couple of weeks. And I think that's restoring some confidence going into Jackson Hole.
This is what I find fascinating, that basically this is back to the beginning of the year, where essentially you could have a good economy and you could have aggressive rate cuts, because guess what? You could have the immaculate disinflation. We're bringing that back again in a massive form, and we're expecting Jay Powell to really lean into that on Friday, saying that essentially to normalize policy, you have to bring rates down pretty consistently. And we heard that from Austin Goolsbee. We heard that from Neil Kashkari over the past few days. So to me, that's what's interesting about the fact that the bond market looks like it's been somnolent since you've been gone, whereas stocks have been whoop, 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 because they're really responding to the soft landing, hard landing kind of whipsaw.
I want you to do that again. What have stocks been doing?
Whoop, 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 whoop.
Thanks for that, Bramo. I've missed you.
I missed you too.
Okay, that's stocks and bonds. Let's get to foreign exchange and a different central bank, the BOJ. I want to talk about dollar yen. This is good news. The fact that this is what dollar yen is doing, and the equity market's just about unchanged on the S&P. So this is a lot of Japanese yen strength. Dollar yen down to about 146.48. If this was 2 weeks ago and we had a move like this on dollar yen, Lisa, I think we'd have a very different picture in the stock market.
Yeah, people right now are looking to some sort of explanation from Japanese authorities of why they hiked and what they have going forward. But you're right. How much does this really show how much we've unwound the carry trade? We're not as vulnerable as we used to be. Hedge funds are actually going long the yen. So this isn't disruptive in the same kind of way as it was in the past. It kind of raises this question, how much was last week the healthy washout that allows the market to really rally that much further, because there aren't necessarily the excesses baked in?
Just a pure observation this morning, clearly breaking that disconnect, that connection rather, between what's happening in the Japanese yen, the FX space, and what isn't happening in the equity market this morning. Under surveillance this morning, the race for the White House hitting fever pitch this week. Kamala Harris said to speak at the DNC on Thursday. Before that, we'll hear from President Biden tonight, and VP Picton was on Wednesday. Donald Trump countering the event with rallies in 4 swing states, a trip to the US-Mexico border, and Anne-Marie, a series of interviews.
He's really going to try to paint this split screen this week as you see this momentum building and coalescing around Kamala Harris at the DNC, when she'll pretty much be anointed leader of the party right now. The issue Trump is having, and this was all across the Sunday shows yesterday from a number of individuals, whether it was Nikki Haley last week or Senator Graham yesterday, Governor Sununu yesterday, saying almost any other Republican candidate would be winning the race by 10 points if you talk about these economic issues. What the campaign is trying to do, what Republicans are trying to do, is get Trump to stay on message. Can he do that this week? That's a big question.
You know, you started by talking about how Kamala Harris is basically riding this incredible wave of, goodwill and a feeling of just, at least you're not the other guy. Is she going to be challenged? I think is the bigger question right now. Because who is going to do it? Is it going to be Donald Trump? Is it going to be her own party? Is that pressure even on when we're not talking about real policies? Lori Calvasina is talking about how all the policies are just being taken as sort of noise to cater to certain constituencies rather than actual policies.
The rhetoric of the policies is to try to paint a picture of positivity, momentum. We're happy warriors. This is going to be a joyous convention. One thing we need to watch out for, though, as the Democrats try to paint this picture of unity, there is going to be potentially mass protests at the DNC for the Biden-Harris administration's handling of the Gaza war. You see the president really leaning into this. He wants to try to get a ceasefire negotiation. Antony Blinken will be meeting with Netanyahu today. They want to shore this up before November 5th.
Steve Eisman came on this program a number of months ago. He said that the former president would win this election race. I think at the time Joe Biden was still in the race. And he said that was the reason why. That when people started to see that, the images that came from the DNC, the tide would turn the other way.
Right. They would be reminiscent of 1968 when you had these protests at the DNC in Chicago. That did not go well that year for that election when it came to the Democrats. So potentially this could take some of the shine off of that momentum they have. But the momentum, if you look at the polls over the weekend, clearly on their side, which is why the Republicans want Trump to remain on message. Because you look under the hood of the polls, even the FT poll last week that said more individuals now see Kamala Harris, that they trust her on the economy. Under the hood, when you ask people if they feel better, inflation, the trust remains with the Trump administration when it comes to the top two issues, the economy and immigration.
He is struggling to remain disciplined. Let's put it that way when it comes to campaigning. This week is stacked. I mentioned that a little bit earlier. We also get some earnings from some retail-facing companies, some consumer-facing companies, Macy's, Target, TJ Maxx, among the names reporting on Wednesday. Those names report following a decent read on retail sales last week. At least we talked about some of the contradictions between what we're hearing from some companies on the consumer in America and what we're actually seeing in the hard data in retail sales.
The hard data also being Walmart, which doesn't see any fraying of the consumer whatsoever. Key question to me this week will be how much is this the big are getting big? The big are getting bigger, I should say, and Walmart gaining share at the expense of, say, Target versus rising tide lifts all boats. This isn't the same kind of strong consumer that can lift everybody. And I think that that's really maybe what we're going to see in some of the earnings this week.
Look out for those numbers on Wednesday. The main event, of course, on Friday, when Fed Chair Jay Powell delivers remarks at Jackson Hole. Traders looking for fresh insight into the Fed's path forward as the rate cut debate shifts from how soon to how much. Joining us now around the table is Nina Richardson of ADP. Nina, good morning. It's good to see you.
Good morning. Great to be here.
I want to go back to something you were talking about a few weeks ago before we get into Jackson Hole and what we could expect to hear from Chairman Powell. You said it's too early to talk about a hard landing when others were talking about a hard landing. You said the middle part is difficult to read. Can you walk us through all of that again? Because I think the data over the last week or so validates your approach.
Well, this would be a very different Jackson Hole conversation if the data didn't break out the way it did last week. What we saw is there's still strength in this economy. You saw it with the consumer, you saw it with the job market, and you saw that inflation was going down. And so, yes, it was way too soon to talk about recession or a hard landing. And I think the goal, to me, for this Jackson Hole conversation is to put the brakes on the fear-mongering about the recession and tell us what normal looks like. We, as an economy, either Main Street or Wall Street, we don't have a good view of what a normal economy looks like. Not in the unemployment rate and not in the inflation rate. Remember, we're coming from a period where inflation was too low before the pandemic, not too high, and where unemployment was below 4% comfortably. We're not in that regime anymore, so what does normal look like?
Can we tease out your assessment of that? What do you think normal looks like? What would you say if you were Chairman Powell this Friday?
Well, first I would make it clear that we are not going to do an emergency rate cut for something under 5% unemployment rate. That was ridiculous. I would shape that narrative of what is the natural rate of unemployment for the economy. The second thing I would do is talk about this framework. Now, I know this is a conversation that the Fed will actually have next year, but we left the pre-pandemic period with a Fed who said that they were comfortable with inflation peaking above maybe up to 2.5%, that we would average that 2% target. Well, we're not in that regime anymore. So what is the comfort zone around the target that the Fed was willing to promote? It may not come in this conversation this week, but it will certainly come at the end of this year and into 2025.
Neela, you said that the idea of an emergency rate cut is ridiculous, and that if you were here
for under 5%,
for under 5% unemployment. Sorry, I didn't mean to misspeak. That was where you thought he should start. And that's why I think it's so fascinating that the theme of this Jackson Hole is reassessing the effectiveness and transmission of monetary policy, because it comes through them flapping their gums. I mean, basically, this is the main aspect of monetary policy that we hear on a regular basis is forward guidance. At what point does the forward guidance have to dampen the sort of Goldilocks, immaculate disinflation that's being celebrated right now in markets?
I think what you hear in the Jackson Hole arena is much more a more contemplative Fed. Right? And the limits of monetary policy. And where do you see those limits peak out? The housing market. There's only so much the Fed can do. It doesn't matter if you raise rates up or down by 50 basis points. You're still going to have this Iceland in the housing market because there's not enough inventory. There are other places where the Fed's reach is not as effective as even it was in 20, 30 years ago. So there is a humility about the transmission mechanism that you'll see this week that is not part of everyday conversation.
If that's the case, what difference will it make if they drop rates, if they drop borrowing costs significantly or not in the near future, especially if that's already being priced into financial markets?
You're already contemplating my answer to that. There's not going to be I think those who are thinking that this rate cut is going to change Main Street are overestimating the power of 50 basis points on the street. Not the Wall Street, the Main Street. It's not going to make that small business hire 5 more people. It's not going to change the calculus of someone who's living paycheck to paycheck. It'll matter for people who are about to buy big purchases like housing, like they're leasing their car payment, but will it matter for the rank and file of Main Street, for Main Street consumers? Not as much as it will matter on Wall Street.
So this is really the key question. Will essentially rate cuts bolster asset prices with little other effect in the broader economy?
In the short term, yes. In the long term, what it does is it leads to this normalization of the U.S. economy, where we started with the first question of this conversation. What is the natural rate of unemployment? Is inflation going to go back to sleep like it did the 20 years preceding the pandemic? I think not. I don't think those disinflationary forces are the same or as effective as they were before the pandemic, those being demographics and globalization. So if the Fed is confronted, if central banks around the world, which is the focus of Jackson Hole, not just the US, but global central banks, are confronted with periodic bouts of inflation now, that they didn't have to confront before the pandemic, then that changes their game. It changes how they view inflation, and it changes the actions they take now because they set a precedent for the future.
Neela, I want to talk a little bit more about the housing market. Last week, the data was really soft when you look at new housing starts and the confidence when it comes to builders. Even Home Depot was saying they're seeing it with consumers deferring projects. Kamala Harris has this proposal for $25,000 for new home owners. Potentially, she wants to do this if she's elected and she gets the Congress with her. Doesn't that increase demand? And then wouldn't it raise prices? How do you view that in terms of an economic lens?
It's interesting to me that housing is not more of a voting issue. Many Americans pay more than 30 to 40% of their budgets on housing. And prior to the financial crisis, every administration, Republican or Democrat, had a national housing plan that evaporated after the financial crisis. So just sticking your toe in these waters that affect so many Americans, either candidate may get some breathing room in terms of that consumer, that worker who really does, where housing really does make a difference. Now, is this plan, does it go far enough? I don't know. I think that the conversation on housing is really important, though.
Neela, appreciate your input. As always, you're going to Jackson Hole, right?
Yes.
I think you're going to catch up with the team as well when you're over there, so looking forward to it. Neela Richardson there of ADP and a Bloomberg TV contributor. There are still some banks looking for a 50 basis point cut. at the next meeting. One of those banks is Andrew Holmhorst over at Citigroup, and he mentions housing, which Anne-Marie just brought up. Lisa, he said the continued contraction in manufacturing, falling housing starts, the rise in the unemployment rate are telltale signs that the economy is poised to tip into recession. That's the view from Citi. They're still looking for 50.
He's been talking about, Andrew Holmhorst, a downturn in the economy that's more pronounced. Key question, this really goes back to the theme of Jackson Hole. How much can a 50 basis point rate cut really ameliorate the situation in housing? And how much is housing kind of divorced from some of the other fundamentals of the U.S. economy? Real deep questions that actually I'm excited for the philosophical debates on Friday.
Coming up, Tom Keene, Lisa Abramowitz on Friday talking about housing and philosophical debates about housing. Let's get you an update on stories elsewhere this morning with your Bloomberg Brief. Here's Danny Berger. Hey, Danny.
Hey, John. Ernesto has re-strengthened into a Category 1 hurricane. The storm is now passing near Canada, impacting the U.S. East Coast and the Canadian Atlantic coast. The National Hurricane Center said life-threatening surf and rip current conditions are likely. Ernesto is expected to weaken tomorrow. San Francisco Fed President Mary Daly told the FT that she has more confidence that inflation is under control. Even so, she argued for a patient approach to policy, saying, quote, gradualism is not weak, it's not slow, it's not behind, it's just prudent. She added that the economy is not in an urgent place and that while slowing, the labor market is not weak. Her comments come ahead of the Jackson Hole conference where Chair Powell speaks on Friday. And AMD has agreed to buy ZT Systems for almost $5 billion. The deal gives AMD data center technology. It's a direct challenge to NVIDIA's AI dominance. ZT makes server computers for owners of large data centers. It's the kind of customers that have been pouring billions into new AI capabilities. NVIDIA is still by far the chips industry leader in the AI boom, but AMD is seen as its closest rival and has been making inroads. And that's your brief, John.
Danny, thank you. More from Danny in about 30 minutes' time. Up next on the program, rate cut bets weighing on the US dollar.
We've seen this movie before. We didn't believe it at the beginning of this year on the 6 interest rate cuts, right? We said that would get walked back. We didn't believe it at the beginning of 2023. You know, third time's a charm.
Seen this movie a few times, haven't we? Live from New York, you're watching Bloomberg TV.
What about artificial intelligence? Is artificial intelligence going to enable you and others to say, we have enough information to know exactly what something is going to be worth in terms of insuring it or not?
Artificial intelligence is finding its way into our business in a variety of different factors. I think the first piece is getting much better insight into data, which allows us to make better decisions on underwriting. It's also a great opportunity to service business better in terms of like call centers and different ways of what's using robotics and other AI will be very helpful. But it is an emerging practice within the industry and one that is evolving very quickly. So it's also going to present risks that other companies, how they use it and how they use large language models and making sure the decision making is very sound. So it's complicated, but it definitely is benefiting the business today.
From the beating heart of global finance, economics, and politics, and wherever newsmakers are moving markets, Bloomberg brings you conversations that allow for deep discussions and important insights. What do you think the future is for inflation? Is this new normal? Are markets too optimistic? How do you worry about the things that are outside your control? How does the current fighting completely stop? I'm Francine Lacroix, and this is The Pulse, every weekday only on Bloomberg.
Middle East and Africa. Vibrant resources and high-yield investment opportunities abound. Join me on Horizons Middle East and Africa for the stories, newsmakers, and insight from this exciting region. Now weekdays, only on Bloomberg.
U.S. jobs numbers are released. Bloomberg has the report under surveillance with crucial data and expert analysis at terminal speed. Nobody covers jobs day like Bloomberg.
Live from New York, welcome to the program. Equity futures, your scores look like this on the S&P. We are totally unchanged, and the bond market totally unchanged as well, which I imagine after the last few weeks is probably a welcome thing for you all. Under surveillance this morning, rate cut bets weighing on the US dollar.
We've seen this movie before. We didn't believe it at the beginning of this year on the 6 interest rate cuts, right? We said that would get walked back. We didn't believe it at the beginning of 2023 when the Fed funds futures priced in 3 interest rate cuts for the back half of 2023. You know, third time's a charm. There's no doubt the Fed will go in September. I just don't believe the 7 to 9. And if you get 7 to 9, it's a problem for the economy.
So here's the latest. The US dollar extending losses as traders await comments from Fed Chair Jay Powell from Jackson Hole on Friday. Expectations for a September Fed rate cut happened to push the Bloomberg Dollar Index to its lowest level since March of this year. Steve Englander of Standard Chartered writing the following. We now expect 3 25 basis point cuts from the FOMC for the rest of 24. We also expect steeper rate cuts in the first half of 25, totaling 75 basis points in Q1 and 50 basis points in Q2. Steve joins us now for more. Steve, welcome to the program, and let's start right there with your calls for 3 cuts this year and 125 basis points in the first half of 2025. Can you help us and our audience understand whether that's an adjustment based on falling inflation or whether that's a shift to accommodation to confront weak growth?
More the first. If we really see weak growth, you know, which is not our baseline, but, you know, 50s are in the picture. The 50 story is a very, you know, a typical recession fall off a cliff story. We don't expect that, so we have 25. So I think as we get into 2025, with the unemployment rate drifting up and inflation getting closer to target, all the considerations of, you know, how tight should real interest rates be matter. So that's why we think that they'll be able to cut more aggressively and bring the Fed funds closer to neutral in the first half. I think the Fed would prefer not to do it in 2024 because they want to be sure we're still on track for, you know, getting target inflation, and they want to be sure if they do a 50 that the economy is in dire straits. But by 2025, they'll be more confident that they can do an isolated 50. We don't think it's going to be too many of them.
Steve, there are 2 very different conversations, though. There is a key distinction, and you've drawn it. The conversation about removing restrictiveness and a conversation about shifting towards accommodation. What does the dollar look like? How does it trade in one backdrop versus the other?
Yeah, the dollar is kind of interesting. We thought that the dollar would, because we're at saying 25 basis points. The market was somewhere between 25 and 50 in Q4. So as the market pulled back from those rate cut expectations, we thought the dollar would strengthen. What we've seen so far is that the asset markets and the currency markets are paying attention to the ebullience that you're seeing in equities. And, you know, that's kind of been driving the dollar weaker, even though the interest rate moves have been more in favor of the dollar than against it. We have to see if that persists. There's still a long way to go before we entirely get rid of the 100 basis points, get back to 75 that we expect. So we as a baseline, we still think the dollar could nudge stronger. 2025, we think, will be a weak dollar year because that will be, all systems go to basically get back to neutral. The Fed will converge with everybody else in rates terms.
Does it bother you, Steve, that the bond market disagrees with itself? That essentially you have Fed funds futures talking about your view of things, 200 basis points of rate cuts by the end of next year, but then you've got a 2-year trading at 4%. I mean, you start talking about the dollar before you even get there, the market can't agree with itself.
Well, I never asked the market to be entirely consistent because there are different segments in the market. But, the 2 years is kind of, pricing in that Fed funds, say by the end of 2025, beginning of 2026, will be around 3%. We're now at 5 and change. So the 2 years sort of averaging, where we are going to be versus where we are now. But I would say this, and I think this is really important. If it does turn out that we're in a typical recession, that, all the somnolence charts that on unemployment that everybody was pulling out, that this economy follows the contours of a typical recession, the market is way off base because Fed will take real rates to 0, maybe negative. So that would mean like a 2% Fed funds rate or even below. I think right now the market is pricing in a very comfortable sluggishness in the U.S. economy that, mostly 25 basis point cuts can deal with. If it turns out that's not the case, we're mispriced, and we could go back to the early August world where, equities are mispriced because the economy is a lot weaker, and fixed income is mispriced because the cuts are going to have to be a lot deeper than, what's priced in now.
This raises a question going forward, and John was alluding to it, the idea of dollar weakness or dollar strength, depending on what kind of rate cuts there are. I'm wondering how much some of the dislocations or some of the overweights on the dollar versus the yen or things like that, how much those carry trades are really flushed out of the system last week, giving more of a clean slate that will lead to more controlled moves, not the same kind of violence that we saw.
From the indications we have, certainly what you call fast money, hedge funds, high frequency traders, they got out of their long dollar positions very, very quickly. So the market is pretty clean. There could be a few segments of the market where they're catching up. I think that the positioning is much, much lower than it was 2 weeks ago or even a week ago, and it's certainly not in terms of dollar longs. Those have kind of disappeared.
Steve, just quickly, are you satisfied on a morning like this morning that we have broken the correlation between the Japanese yen and what happens with risk, given that equities are holding up okay this morning, even with a much stronger Japanese yen?
I'll say this. I never thought that the yen trade was what was driving global risk. It did drive Asian FX. I mean, that's why, all Asian currencies are strong. And it did drive the unwind. But I think that the big equity market moves that we saw and the big fixed income moves that we saw were driven by recession fears. And those could come back. It's not our baseline, but those could come back if it turns out that the unemployment rate keeps going up by 0.2% a month. And so we're not out of the woods yet.
We'll be playing this game again on September 6th. Looking forward to it. Steve, thank you, sir. Steve Englander of Standard Chartered. If you are just joining us, just a flavour, sneak peek of what's happening in foreign exchange. Against G10, the dollar is weaker against almost all of it, with the exception of the Canadian dollar. The Japanese yen, the standout here. Dollar yen with quite a move. Some real Japanese yen strength. Dollar yen down by about 0.9%. You look at what the equity market's doing, pretty much unchanged on the S&P 500. It's a welcome development for a lot of people who have been whipsawed in this market over the last couple of weeks.
It kind of goes to what Steve said, which is essentially a lot of the carry trades have been unwound. So a lot of the leverage that kind of would lead to that correlation where people would have to sell U.S. risk assets to bail themselves out of their carry trades that were getting blown up on the yen trade, that isn't as much of a present factor right now in markets. And I think that that's what this indicates.
Just get the feeling we're still only one jobs data point away from playing this game all over again, right?
Isn't that fun?
I know. September 6th. I think it's sort of circled on the calendar. For all of us, the second hour of Bloomberg Surveillance is up next. Here's your lineup. Matt Borden of Raymond James will be joining us alongside Bloomberg's Bobby Ghosh and Kelsey Barrow of JP Morgan from New York. This is Bloomberg.
It's the world's second largest economy with a growing influence in global affairs. But geopolitical uncertainties, deflationary pressures, and questions about foreign investment linger. Bloomberg, the China Show, brings you the unmatched expertise you need to keep track of breaking news, in-depth market analysis, and the most influential newsmakers in and around China. Bloomberg, the China Show. Weekdays around the world, right here on Bloomberg. Context changes everything.
You are also an owner, I should have pointed out, of 3 major sports teams.
That's right.
Right? And you're the first woman, as I understand it, the first woman to own 3 major, have stake in 3 major sports teams. Is that right?
Yes, and we'll say African American.
You were approached by the owner then of the, I guess, the Washington Wizards and the Washington Caps about maybe buying the Washington Mystics, which is the women's basketball team. And what did you say?
Well, first of all, it was Abe Pollin. He did come to me and Susan O'Malley, and they said, Abe Pollin says, look, I want you to be the face of the Washington Mystics. And I said, what do you mean be the face of? He says, I want you to buy this team. His health was failing. And I have to tell you, and a lot of women can understand this, we never get these opportunities. So that was the first thing that struck me, and I was flattered. I was really flattered. I said, well, Abe, what are the financials on this? And he handed them to me. He says, well, they're not making money. But I was still intrigued about team ownership.
Welcome to the world of decentralized finance.
With a surge in Bitcoin, you have crypto stocks also surging.
Bloomberg's covering all things crypto, the people,
This is a political attack, and we must hold our elected officials accountable.
the transactions,
Really a record-breaking moment.
Bitcoin is the exit strategy.
and the technology.
Awareness is going to grow, and these things grow the overall industry.
Crypto as an asset class is here to stay.
Bloomberg Crypto, only on Bloomberg.
Always on the heartbeat of the tech
spread across global markets.
The real-time data aspect is going to be important.
We're going to bring you expert analysis on that. Sure.
Don't miss Bloomberg's interview with the
From our studios in New York and San Francisco, our expert hosts have the data and analysis about the companies you know and the startups to watch, plus the interviews you don't want to miss. Watch Caroline Hyde and Ed Ludlow on Bloomberg Technology, the only daily business show dedicated to tech, right in the middle of the trading action, every weekday, only on Bloomberg Television. Context changes everything.
The labor market is still tight. The U.S. economy is still relatively strong.
Perhaps the Fed chair is talking the talk and walking the walk.
Federal Reserve has a big decision in front of them on timing and, of course, the extent of the cuts.
We just maybe fade this idea that they're going to be able to cut as aggressively as what everybody else does.
I think these central bankers have to be careful with the power that they have.
This is Bloomberg Surveillance with Jonathan Farrow, Lisa Abramowitz, and Anne-Marie Hordern.
The second hour of Bloomberg Surveillance starts right now, and it's a much calmer morning following the better-than-expected data we saw throughout last week, both on retail sales, jobless claims, and CPI. Just nothing scary in inflation for both CPI and PPI. That means your equity market is on a 7-day winning streak on the S&P 500. Coming into this morning, your scores look like this. The S&P 500 essentially unchanged. The Nasdaq down by about 0.1%. The Russell pulling back just a touch as well. The week ahead is absolutely stacked. It starts really on Friday with Chairman Powell. That's the top of the billing this week, addressing Jackson Hole. And then we kind of work backwards towards the DNC. But before we do all of that, Bramo, let's start with Chairman Powell on Friday. If this speech was conducted 2 weeks ago,